Well, good morning. Looks like everything is working properly this morning. That's a good thing. It's 8 o'clock in the morning, Central Standard Time. It is the 26th of August, 2025. Welcome to my virtual journal. I follow a risk-neutral trading methodology that I share completely and transparently here on the stream. The purpose of this stream is, as I said, my virtual journal. I capture what I'm watching on my screens, and my voice over provides insight as to what I was thinking. So essentially, this is my trading day and my world and my journal, and I share that in the spirit of transparency and accountability. It's not for financial advice, nor is it for trade advice. Again, it is my journal, and I'm talking when I do the voiceover here, I'm talking to myself and sharing it with whoever might come past or drop in or hopefully find it useful. I'm not funded in any way here or monetized, so this is strictly for the stream is strictly for subs and likes. I'd appreciate both of those. That'd be great. It'd help the channel out and get some more people for a little bit more of a community. Definitely, if you pass through, drop something in the chat. That's always great. And the reason I stream this to YouTube is so that I can review the streams on any device, and that's pretty handy because the streams last the entire trading day from now, 8 o'clock in the morning with the explanation, pre-market numbers, etc., through the open and all the way until the cash close at 1500 in the afternoon. Again, for transparency and accountability, so there's no question about my commitment that no trades are taken on these accounts off of the stream. And I share, everything, my thoughts, my setups, my entries, everything openly and here on the stream. Now, any trades are captured, entry, stop, targets, movement of anything is all captured, and the P&L is up here, etc. Incidentally, I stream this high def in 1440p at 16 FPS. So if it looks a little grainy, hit the gear and YouTube, and you'll get it up to speed. Let's get to the numbers here. So we begin to have, I guess I shouldn't have to tell anybody that all eyes have been on the Fed and this famous rate cut that all the market is clamoring over, and these folks inside the Beltway are clamoring even louder about. Today we had durable goods, and we're going to have consumer confidence at 9, and then we've got a 2-year note auction at 12. Durable goods and consumer confidence, GDP, all of those things are metrics the Fed uses to determine whether they need to cut rates or not. So every time these numbers come out, the market is holding their breath with the expectation that there'll be a rate cut in September. Whether it's good for the economy or the people of whether it's good for the people of the country or not, they don't really care. What they want is to put more billions in their pockets, just like normal, I guess. So this is investing.com, and I prefer this one for my numbers in the day and also for earnings because it's easily filterable and concise and easy to read and interpret. Earnings for the week are important to bear in mind. There are no earnings today or tomorrow. Today's Tuesday. But tomorrow is NVIDIA, which is the most valuable company on the earth at this point that I believe. And it's $4.41 trillion market cap. This little moon means that it reports after the close tomorrow, and the little sun down here is before the open. And then we have the beginning of the, Dell and Marvel and some of those things coming up on Thursday, and then nothing on Friday, nothing on Monday, and again on September 2nd. So there's the numbers. The next, this is free, by the way, and the next, the other news source that I use, Financial Juice, is also free. This is a different format. You can filter it as well. You can have the reports and the numbers over here in the docket, and then you get a bit more of a squawk box feel over here. And you'll notice that Trump cabinet meeting is 11 this morning. Some things get thrown in here as they're scheduled quickly. Case Schiller's out at 8 o'clock. That's a big number. Or was a big number, sorry. And a little bit more granularity on Financial Juice. Both of these are free. You can pay for them if you want to, but, that's up to you. So let's start the pre-market here, which is the most important, I think, probably, or close to it. Well, overnight inventory is 100% short, I would say, or 99.9. Here's our open. And the only thing that got a little bit above the open are these two right here. And the rest of the inventory for the entire evening and ETH session so far is short. What do I think that means? Well, typically I would suggest that would be that we would get a bit of responsive buying at the open to take profit. But given this is yesterday, what a mess that was. These are the full session, right? So this is overnight, day, RTH, overnight, like that. Given yesterday and the uncertainty around these numbers and what's going on, also it's important to note that this is the last weeks of August, which are typically the slowest, lightest, least liquidity trading weeks of the year, only outdone by Christmas, New Year. So, everybody's on vacation, coming home, kids are going to school, yada, yada, yada. So there you are. Use extreme caution. I didn't even consider trading yesterday. It was just a mess. Some folks did. Some folks took this failure right here, this IB failure, and did well. Good for them. So there we have that. This is my IRT charting, which is, and this particular tab is for the E-minis, the S&P, the NASDAQ, and this is my micro composite or my higher time frame chart, which is a daily session only. These are daily bars. I should say this is the RTH session, and these are daily bars. Wherever price overlaps, I draw a volume profile around them, and in so doing, that generates a micro composite VPOC. These red and green high volume and low volume node lines based on the profile. Those red and green lines are pushed automatically to Bookmap. So are the session prices. This is the market profile. You see that big string of singles from from Friday, where we blew out of there while Fed Chair Powell was speaking, and put in this big string of singles, and we started to get into them a little bit yesterday, but we didn't, and we got into them a little deeper last night. It would be entirely in the scope of possibility to trade across these singles and repair that. That's something pretty normal. You'll see that the market is basically light volume, and we are down 0.06, not much, but 0.06. The way these red and green percent change work are the last price compared to the settlement price. This is Bookmap, which is my execution platform, basically. This is the micro composite column where I manually enter these flags. This is the high and low volume nodes. This is the full session volume profile, which starts plotting at 1700 every night and goes through 1600 today. This is not the ETH, this is Globex or full session. RTH volume profile, which will reset at 8:30 this morning. Is supposed to be automatic, but it's been giving me some crap. And this is a real important column. This is my notes column. The first thing I do every morning is to clear all those notes. Yep. And then I determine the open type for the day and change the column title to that open type. And it's real simple. There's only two criteria. If we were to open right here, right now, how would the open compare to the previous RTH close? We're lower than the close, because there it is. And how would it compare to the previous RTH range? We're out of range, because here's the previous RTH low, and up here's the high. So we open right here, right now, we would open lower out of range. I hate these days when we're just fiddle farting back and forth right around the inner out of range, in range, out of range. I hate those kind of days because the open type dictates which statistics I will use and enter here now in this pre-market associated with the price levels. We'll do that in a second, and I'll keep this title as it is right now. I'm not sure what we're going to do here. Well, I'll show you how to change the title. I guess that's important. You just do that. So this would be lower out of range, assuming that's where we stay. I don't think we will, but anyway. These are the session prices pushed from IRT. And none of these are mysterious, magical, or in any way difficult. Everything I do is math, common sense, probabilities, and that's it. There's no indicators on my book map or my IRT. There are just these price levels, including the POC for both RTH and full session. POC simply marks the price at which the most contracts have traded so far in the session. That's all. 4,159 contracts have traded so far in the overnight, and that's where the POC is. The very moment that one of these other prices is 4,160, that line is going to move there, period. We have the RTH and the Globex VWAP, which is, I guess you could technically say that's an indicator because it's calculated. We have the mid, and then the session prices are just as they are abbreviated here. Perhaps something that gives people pause now and then are the IB, low and high. Because of the name, it means initial balance. It's an old market profile terms. What these two levels actually represent are the high and the low of the first 1 hour of the RTH trading session. Nothing more, nothing less. And then this is the heat map where these different highlights areas here reflect resting liquidity in the book. And this is the book. Now, something I do as part of my workflow here, you notice that we did not take out the previous naked volume point of control from Friday, nor, and I've marked the previous auction naked volume point of control from yesterday right here with the date. Notice that we did trade up through the micro composite VPOC. And the way I do these is, my workflow is as follows. Once it has been revisited, I change the text to black so that I know where the level was, but I know that it's not active anymore. We've already been there. Okay, now I will drop over quickly to the statistics. Once again, real simple. Statistics come from the study in IRT. As I said, there's only 4 open types. Gap up, gap down, 2 in the middle. Easy. Right now, we're looking at this one. IRT conveniently highlights the correct open type, but only after the open. So right now, it doesn't do us any good, but it will. At this moment, we will open lower out of range. What does that mean? It means that the study looks back at 2,000 days. Of these 2,000 days, we opened lower out of range, 291 of them. of these days where we opened lower out of range, we revisited the price revisited the overnight volume point of control 241 times, 82.8%. Boop. Overnight volume point of control, we know happens to be living right under here, so I'm going to put that right there, and that is whatever I said it was, 82.8% of the time. Boop, and there you go. It's that tough. Now, there we go. Let's move this up here. There we are. Next, and then I simply go down the list. The next one is the overnight low, which is 69.1. Overnight low is 69.1. And I'm not going to enter all of these this morning because I'll be pretty surprised if we don't get up here over this previous overnight low, and which will change this to lower in range rather than out. So, and when you're dealing with the two extremes, there is some differences in the stats. The two interior ones, not so much. But I'm going to continue on now. The overnight or the IB high is 68.1. That's a good one to know. And that's way up here, which is, you'll see this doesn't make a lot of sense. 68.1. And I do this IB high. Why do I do that? Well, remember the definition. The minute we open, this flag, this line, and this line, or flag, will go down to the current session, wherever that is. If it's down here, it's going to be clear down below us. So these won't be here anymore. And I will want to know what the hell 68.1% was, and it's the IB high. Next on the order of business is the overnight mid, and that is 68.4. And that is right there. And that's all I'm going to do so far. Previous low, let's do that one. That's 67.4. That's right here. Now, I'm going to stop because I am relatively sure, as I said before, that we're going to have a change in the weather here. So that is how I do the statistics. And I want to point out at this moment, very definitely, these are the statistical probability of the times that this price level was revisited when we opened lower out of range over the past 2,000 days. Probabilities. Not magical pointy hat Harry Potter wands or hard fast lines in the sand or secret sauce or anything else. Trading is a business of probabilities and statistics. I'll talk about that later, but that's what it is. And that's not just me that knows that or that came up with that. That is from virtually any professional trader that's successful. The most successful in the world, actually, have all recognized that. And that's why I follow along. I had an inkling about it, but it was nice to have that confirmed, right, by the most successful hedge funds and traders in the world. Let's see what the previous close was. Where the hell is that? That's 44.0%. That's right here. And as I said, once we trade, if in fact we trade up above the previous low, then we will be lower in range rather than out. That's why I kind of am hesitant of putting all the statistics by these levels. Kind of ahead of the game, but that's okay, I guess. The next order of business here is the something I do every day, and that's the IB. I put a snap, post a snap to the Traders Lab. IBM. What am I thinking about here? Now, The Traders Lab is a bookmap Discord chat room called the Traders Lab. And it is, and you see why I don't multitask well and why I do this stream as a video. Anyway, it's called the Traders Lab. It is a bookmap Discord chat room, and it's completely free. You don't even have to be a subscriber to Bookmap. You do have to join their Discord server, obviously, in order to get there. But you know, that's normal, isn't it? So the Traders Lab was started by a guy named Tom B. He's a professional trader with 46 years plus experience. He doesn't trade live. He doesn't call trades, and you're never going to see a snap of his account, I'm sure. Nor are you ever going to see gold chains or a Maserati. But I believe that he is, in fact, what he says he is. And, you know, there comes a point where you sort of have to trust people after a few years. And one of the things that makes me feel that way is that it is, nothing is ever for sale on the Traders Lab, nor are you ever solicited for anything. So that's one hell of a start in the right direction, in my opinion. What happened here? Something happened here. What happened? Oh, developing value area high has come over the top of the previous low. That's why you see here, I was freaked there for a minute. The previous high. And here's the developing previous RTH low. There you go. And the developing value area higher at the same location. That threw me for a loop there for a second. I couldn't see the previous low to determine whether we were in or out of range. Anyway, back to the Traders Lab. This is the snap I put in there every day. And about 6 in the morning-ish, I put in the snap of the reports, which I've already shared here. So there's that. This is just to give people in there a leg up on a bunch of numbers that they may not have depending on their charting. I don't recommend any of the other Bookmap Discord chat rooms or any other chat room online, simply because I haven't been to them all. I've only been to 2 other Bookmap Discord sites, and they were typical. The guy, third word out of their mouth, was selling you something, which is fine. And it's great if that's what Bookmap wants to support. But it's not what I'm interested in, and therefore I am not going to endorse that as a place to go because I don't know. There you are. So there's that. Now, the next thing that's pretty important for us to do, I think you'll agree, is to be able to trade. And the way we do that here on the book map is, hold on a minute. The way we do that in Bookmap is to activate the trade control panel. That's this little guy right here, this padlock. You see it's locked. You click that, and then you have to choose one of 3 methods that you will interact with the application to trade with your mouse. Chart. The only area you can trade with your chart is this active data column right here. Dome, you can only trade with the dome columns and both columns. Now, the next thing I do is I use multi-brackets, which is the basis for the risk-neutral trading system or methodology. This is the smallest risk-neutral package you can use because it requires even number of contracts. You could have 20 if you wanted to, but this is the smallest. Once you've decided that, you have your lot size. Then you need to determine the stop loss in ticks. Do that first by analyzing your account risk tolerance and parameters, and then volatility of the market and anything else you use to determine ATR, whatever you use to determine your stop loss size. Once you've determined the amount of contracts in the package and the stop loss size, the T1 or risk neutral scale first take profit target is automatic. Because it is for half of the package, it's for one instead of, and their package is two. And it's for the exact same amount of ticks positively as the stop is negative. The minute this T1 is achieved, the worst you can possibly do is scratch on the trade. Therefore, it is risk neutral. The caveat to that is, of course, absolutely under no circumstances can you or should you ever move your stop away from your entry, because that would completely negate the whole risk neutral philosophy, and the world would know you're a screaming idiot. Maybe not, but you know what I mean. You get my point. The only way the risk neutral philosophy works is if you absolutely never move your stop away from the original setting or away from entry, because that's the whole point. And then the runner is whatever's left. You can do that with 4 contracts, and there you go. 4, 12, 2, half the package, 12. Then the runners. If you're in, if Trump or somebody's rolling out tariffs again and the volatility goes off the map, you can look at, then you can adjust that. That's where you get back to your homework and your analysis as to the stop size in ticks for your, risk appetite and your account parameters, etc. All those things have to be determined by you. Anyway, this is the basic package. I also do the multi-account trading thing here. And this is because this account and this stream reflects a TopStep evaluation, or I should say the entire path to funding to a live account, from evaluation from 0 to hero, right? And it is absolutely every trade, every movement, everything recorded and preserved on stream. Now, in this case, I didn't ever used to use the copy trade thing because I thought it was cheating. And then somebody pointed out to me that I was just an old fool, and what an opportunity. If they want to pay you, if you take one account and get over the profit target into the XFAs, you can then trade the XFA and withdraw money. They will pay you on those sim dollars. Okay, what's wrong with having 5 of those rather than 1? For example, if I take one trade here on stream and I take both profit targets, this is 60 ticks. Because it's copied to 4 other accounts, that means a total of 300 ticks. You see, it's the economy of scale. All right, the next thing that I do is after I've set the risk neutral package, I confirm the package size. I click the padlock again, it stays green, stays unlocked, but I get the real estate back. And I have the exact same parameters up here, metrics up here, and plus I have cancel and close. So I don't need, because I use a multi-bracket, I don't need the brackets and things that are on the trade control panel. And you see that I have all the same metrics right here across the top. And I will point out that I only look at ticks. I never look at dollars. And we're going to open in 30 seconds. So I am not showing you the right screen. I apologize for that. That was pretty stupid. But here we go in 10 seconds, so we'll run through that stuff again. I'm obviously not a professional liar or, influencer, so I'm not very good at that. I get I follow my concentration. Here's our open. We didn't redo anything. I've double clicked. It's not resetting. This is so flippin' frustrating. I've gotten rid of contracts. We're not overloading our data ingest. I don't know what the matter is. I'm clicking that like nobody's business and it isn't working. So I'll start flagging these. We did open lower in range, so that's good. Don't have to change anything. Now I'll start flagging the volume point or the micro, whatever I'm talking about, the migrating VPOCs here. And you notice how I put a red or a blue vertical bar at the start of every session. And that is strictly a, boy, that's terrible. That is strictly a visual clue for me to, hold on. I can glance to the left, and if I see that blue bar, I know that I've got the entire range or session in view, and that's my goal here now. I've got a new technique I use, or a new idea, where I keep the entire session in view, with that line. Meaning I am always have a real valid understanding of context. Now this is the muted yellow POC, which is for the full session. The brighter yellow here, wherever that one, the brighter yellow is for the RTH session. I mean the RTH, and now they're both moving together at this point, so we'll just start flagging them like this. This flagging of the migrating VPOCs is a holdover from when I kept much more zoomed in without using the blue bar concept of having the whole session on screen. Because as the day progressed, the developing value, point of control would scroll off to the left. I want to have the most amount of data that I need for trading here on the hard right edge. That's my thinking. Well, we are having a little responsive buying for profit taking. Thank you so much. We've traded over settlement now, so all the numbers on the quote pages across the world and the Robin Hoods of the world just went green. That got everybody awake. God, this is frustrating. I'm going to have to get on those people and say, what's going on? I mean, I had 5 or 6 instruments. I've deleted them all but 2. This ingest down here, when it gets real busy, there'll be, red lines. Well, if there's no red lines, that means it's not too busy as far as I'm concerned. So what the hell is the problem over here? Next thing I'm going to do first thing in the morning here is to change this to the RTH session, my IRT charting, so that my relative levels are accurate for value areas, high and low, etc. I'm disappointed that I spent that time talking about, come on, what's going on here? Spent that time talking about bookmap and not having the screen being over on IRT. I apologize for that. I got to get better. I got to clean up my act as far as this presenter thing goes. Not because I'm thinking I'm going to be a multi-million-dollar influencer. I would be happy to have that happen, of course, but I want it to be professional and enjoyable and succinct and understandable even for me when I review the stream. So remember that the whole purpose of the voiceover here is to give insight as to what I was thinking when I see these streams. So let's do a quick loop through the, we've got, here's our open, down, lower out of range. You know, this technically was a gap opening, but you know, one tick is not a gap opening. So the gap rules are not really in effect, in my opinion. And now we're going red again because we're below settlement. This is the micros, and this tab is the minis. And we're experiencing no lags in ingestion, so that's good. I don't know whether I saved all this, but I will make sure again. Okay, and now I've changed the charting from full session to RTH session only here on these two for both tabs, micro and mini. And there's a reason I do that probably nobody cares about, but what happens is the developing value area high or low represent the value area high and low of the current auction. The value area low and high with no D in front of it represent the previous auction. So I share these price levels with a lot of people in different sites and places, the TLab for one, Static and stuff. And I'm happy to share them with anybody here in the stream. You just, you know, subscribe, thumbs up, and drop us something in the chat, and I'll be happy to get you the link, and we'll, you know, these push live continuously from 1700 Sunday night through 1600 on Friday afternoon. No problem. I'm happy to share them free. Anyway, so the value area low and high reflected yesterday's RTH session while we were in the overnight. But the moment we opened the new RTH session today, the previous auction suddenly became yesterday's, the just ended overnight session, right? Which would screw everybody up in those that are using these levels. So I changed my IRT to day session only, the RTH session only. And by doing so, this value area low and high now represents yesterday's RTH session. And that's why I do that. There you go. So here we are. Wow, look at those levels. Jesus. I hope it's not another day like yesterday. That was disappointing to me. Frustrating. You'll find, unfortunately, that this stream is not adrenaline rich. You know what I mean? Because that's not the point of trading as a business. And I spend probably more time, without a doubt, more time standing and watching than I do in a trade. Absolutely. And I need to up that game to at least a trade a day if I can, but we'll talk about vetting trades and things like that and where I am as soon as the stream gets a little more, we get a little more time under our belt. We're only in it 6 minutes or something, right? 8 minutes. Now, what do we have coming up in news? Well, if I remember right, yeah, we've got consumer confidence. Here you go. We've got consumer confidence. This is financial juice, remember. Consumer confidence is coming up at 9. And then we have the ever-present unscheduled critical risk component, which we are so is such a big one these days. So here's our consumer confidence number for August. Okay. Financials use the same reports, the same docket is pretty much here, except we have a bit more of a squawk box going on over here. And financial juice picks up all these little Trump cabinet this and somebody else that stuff that the other one does not as readily anyway. So what is an unscheduled or random critical risk? That is any of these things. Right now, the most prevalent of those are anybody to do with the administration, specifically Trump, because you have no idea what they're going to say or tweet when. I'm not saying there's anything wrong with that. I'm not making a political comment. I'm talking about the market and being a trader. If you don't know when something may suddenly move the market, that is a random critical risk potential. So you really need to be mindful of that nowadays. I mean, we all know when non-farm payroll is going to happen. It's going to be at 7:30 on the first Friday of every month. And that's probably the biggest, or used to be the biggest, disruptor of the auction that we had to look forward to in the month. Now it's arguably this random critical risk that we just don't know about. And, it shouldn't be as any surprise to anybody that it's pretty obvious, and from years and years, Trump in particular is extremely fond of microphones and cameras and loves the shock drama, kind of reality TV. Remember, that's what he even got to use his apprentice thing. You're fired to cook. First time in history a president has ever intervened with the Fed. And so that's a huge random critical risk, as is any of the other guys. We've got whatever his name is. Lutkin and Lutnick and Bissett and Trump are pretty much the prime ones who are, what's his name? And Navarro, he sometimes does. So you just have to be aware of those things, and they're unscheduled, pretty much. That's why I'm liking Financial Juice. It's trying to get these things in here, like the cabinet meeting is scheduled, so they've got it in there. You can bet your sweet ass that there's going to be multiple microphone moments during that, in my opinion. The real next, honest to goodness, old-fashioned real economic number report that's coming out is consumer confidence, and that's going to be at the top of the hour. There you go. That's as much as I know. Okie dokie. Gap rules say. The gap rules say that if we open in a gap and we close the gap relatively early in the session, and price is accepted in the previous value, there's an extremely high probability that we'll trade across that value to the other side. Well, I don't generally consider one or two ticks. Here's our open. There's our open at 64.5. And there's settlement. And here's our close, right? Our close is at 53.25. So 3.25 points. That's not exactly a gap, in my view. Okay, that's, and this is all how you look at the market. So, damn, I keep forgetting to do that. I wish the hell I had a thing that would automatically switch screens wherever I had the mouse going. That would be pretty handy. Maybe I should just learn how to be Mr. Microphone Jr. over here. So. Go to radio broadcasting school. Hey, howdy hi there, friends and neighbors. El Monte Slim down here, Wide Track, Pontiac, and Wilmington. God damn, we got some mighty fine deals for you today. Yeah, here we go. Okay, so welcome to the stream. I think I've up to speed pretty much accurately, and away we go here. It looks like I've got the risk neutral package, the TLab deal done, pre-market. Yep, okay. Take a quick run around. Remember, it's a quick visual reference. You by the fact that the padlock's unlocked and it's green, you know that you have a trading facility enabled. What is that? Well, I've enabled both, meaning I can trade with the dome or the mouse. And let me just while I'm on that point, I forgot earlier, I think. You can also trade with your keyboard in any of these three options with hotkeys. And I have my keyboard set up because I used to only trade that way. Two caveats. You need to make sure that you have the focus of the computer on the bookmap application for the hotkeys to work, and that's completely normal of any Windows OS application, not just bookmap. And secondly, I think it's faster and more accurate to trade with the mouse here in the active data column myself, or if I'm going to put resting orders at price over here in the DOM. So that's why I'm trying to convert to and be sure I use only the mouse. The thing you've got to be really careful about is where in the hell you click. If you see this mouse pointer here, and the minute you cross this little line, it turns into a $sign. That means that any place over here you click, depending on where that is, you've either entered a resting order or you've entered an order, whether you meant to or not. And more than once early on, I would be trying to draw a line or move a target or something, and I'd have another order going I wasn't expecting. So, yeah, you got to pull up your boots and adjust yourself to that. But I do think it's quicker or faster and more accurate because you can click exactly at the price, and your hand is typically, or at least in my case, I stand up all day here. And so my right arm is on I'm right-handed. My right arm is on the desk, two standing desks, and it's on the mouse most of the day. My left hand is is usually also resting on the desk. So if I want to hotkey something, I've got to drop the mouse, bring both hands to the keyboard, make sure I'm oriented, and click that entry. Well, that's not very expeditious, I don't think. So while I'm already on the mouse, all I've got to do is go click, and I'm in a trade. That's why I'm trying this. So that's clear. Now we didn't do much responsive buying at all, and we are now exploring lower right over here. So here we go. Hi ho, here we go. So far, we're in a 47 to 57. We're in a 10-handle range. Very quiet. We've got a number out at the top of the hour, 13 minutes or so. I have no compulsion to trade. And I hope to, as I said, I hope to God it's not like yesterday. And it very well may be. This is the most, except for Christmas and New Year, which is not in the same year, these are the slowest 2 months in terms of liquidity and market action of the entire year next to Christmas. So there's that. Anyway, back to this. Once you've confirmed that this is set the way you want it to be, then you click this boy again and you get the real estate back on that whole thing I've already explained. For some reason, I have been overlooking the description of the keyboard lately. Well, we're taking them out, aren't we? Isn't it amazing how often these things happen? And we're exploring lower, so they're not too excited about. They're not too excited about this. If you are really good at trading the rear view mirror and, time travel and stuff like that, like so many of the internet influencers are, you knew very definitely that this was a tested this point up here for a mean reversion to here and down to here, and you got your 10 points in already. Or your 15, actually. I don't have those skills, unfortunately. I'm still rooted in the here and now. I think I mentioned it yesterday, but if you have a Windows 11 machine, which these are, and you do your updates weekly like you should, and about a week or so ago, you downloaded and installed the KB5063878, uninstall it. It's got huge problems, and then set your updates out 2 or 3 weeks. What I do is, so I don't have some, disappointing interruption in the day, I set my updates to check. I pause them for 7 days each Sunday, and then Saturday, I can restart my machines and do updates and all that stuff. And then on Sunday, I reset the pause, and I have no unexpected oopsie doopsies in the middle of the trading week. So that's a good thing for you to do. But if you have downloaded that, Google it, and there's stuff all over everywhere on YouTube and whatnot about it's uninstalling it is real simple, and but definitely recommended. Windows 11. And again, that is knowledge base, or KB5063878, I'm pretty sure. It can wipe your whole, it can, just wipe out your drives completely. Basically, it is around when trying to do file operations with large files. But I figure when there's smoke, there's fire, right? So I'm not gonna risk it. Okay, what are we doing now? Well, we're approaching the 9 o'clock hour where we will have the consumer confidence numbers. We've got about 15 handles in the day so far, rotationally. You can see my new workflow with my beautiful little blue vertical guy over here, which is real handy because I don't have to be down here squinting along the timeline or any of that crap. If I just, even out of my peripheral vision, if I catch that blue line, I know that I have the whole session in view, which is my goal now. Okie dokie. Where are we now? What have I forgotten to do? whatever. Nothing, I guess. Boy, that is. I don't know what I'm going to do. I guess I'm going to have to put in a ticket to Bookmap and say, what the hell? I've tried pretty much everything. I'm now running the latest beta version because Rod recommended doing that. He said it fixed a bunch of issues for him. I have always been conservative and gone with the latest production version of any application, especially when it had to do with my money. And that it did fix one thing that we were talking about in the static, but this bullshit with the volume profile column here, I don't know. I've even thought about deleting the damn column. Maybe let it run for an overnight or something like that, and then throw it back in to see if, you know what I mean, there's some bit that's a 0 that's supposed to be a 1, or, you know, whatever. Something hung up in there somewhere in the code. Worked great for years. I don't know how many years it's been since I was using Bookmap now, but well, at least we've been here and we've been over here in America almost going on 4 years this September. And I've been doing this for that period of time. So, yeah. I didn't use Bookmap so much in KL, but yeah, so at least that long. And it worked great until this recently, in the last couple of months. I don't know. Also, there's been a huge increase in volume, you know, in the markets, which is another problem. That chokes IRT up because it has to process all that data. Well, we're at 79% of our average volume for this time of day so far. This is something that's been really surprising to me. Look at the ATR. We're up here at 4.5. Over here, we got up over 14 yesterday. I thought it was up around there. Doesn't look like it. Looks like only 5. I don't know. Let's see if this thing works. Yeah, that's only 5.49. Now, what the hell was I looking at? It was 14. Well, anyway, still, that's, 5 points. Well, that's well outside my risk neutral stop area. This is part of how you would analyze that, right? If we're up here, even over here, that's outside my stop parameter. So I would have to be really good on the entry to not just get clobbered because I'm standing in the middle of the highway, you know? Little of that responsive buying coming back, or, well, I don't know about coming back, but jiggling around here a little bit. They're not real excited to get back into yesterday's range. Remember that this is previous low. Oh, no, it's not. There's the previous low. This is yesterday's RTH low. So they're not exactly ripping and snorting to get back into the range there. Meaning this thing had the big irrational exuberance of Friday. Are now a little more calm and clear thought is happening, but here's something that's going to be pretty interesting. If we just slowly, day by day, take back all these singles, that'll be pretty interesting to me. Typically, when you get into a string of singles like that, it goes. Here we traded yesterday, and we took out this bunch of them. So far today, we've taken out this bunch of them. we got this bunch left. I'm not, certainly remember, this is me talking to me here, and I'm not prophesizing anything. What I'm doing is just thinking out loud for the purpose of the stream. If I don't talk, then I have no clue what I'm doing. I might as well, it's just useless. The stream would be useless because I have a full recording. Now, I have a full recording of Bookmap only. In addition to the stream, it records absolutely everything, and I have those back for years. But it does not pick up IRT, obviously. So I can't go like that and know where I am. Well, there's our nothing burger for the 9 o'clock consumer confidence number. It's amazing that these numbers don't do anything anymore. It seems like the only thing this market, well, there's 9 o'clock. We did have that little bump there. So we got 53 to 57. We got about 4 handles out of it, 3 handles out of it. All they're looking for is some random goofiness, let's arrest somebody, or who's somebody's liar, or that's fake news, or whatever the hell it is. It's amazing to me, but that seems to be all they're hanging on. Let's fire somebody, Fire a career professional. I have no idea. I have not yet seen the justification for firing Fed Governor Cook. But there doesn't seem to be any need for a valid reason or proof or, any kind of confirmation or conviction anymore. Let's just, pick them up off the street and fly them to Guatemala or whatever the hell it is. They wanted to fly that one guy. They wanted to deport him to Uganda. You ever been to sub-Saharan Africa? I lived over there for 10 years. I'm telling you what, dropping somebody into wherever in Kampala or wherever in Uganda, you're going to drop them off. Obviously, what's happening is these third world countries like El Salvador or wherever, wherever we're sending these prisoners without due process at all, we're paying those countries big money. Do you think that little guy in El Salvador, the Bitcoin guy, you think that slick little boy is housing all of these prisoners for free? He's making a killing at the expense of the American government, i.e. the taxpayers. That's the part that nobody ever talks about. And how we got to a country that just picks people up off the street without trial or court or anything else and flies them to a prison in a third world country is pretty bizarre. I would have never guessed that in my lifetime. Weird. It's a real weird dynamic over here now, wherever you are. That's for sure. And yeah. And then the market's just fluffing around over basically 12, 15 handles back and forth. Get a nothing burger for the report. Now, I guess the next order of business is going to be what Agent Orange and the Random Risk Squad have to say at the cabinet meeting, I guess. I don't know. Hard to keep track. I like to do things process and procedure driven, and it's hard to do that in this environment. And now I guess we're deploying military to major cities, police state, I guess. I don't know. Or military state or whatever it is. What was that? That somebody said something there, you can bet. That was something. I've gotten to the point with this random risk story that I don't anytime I see any kind of movement like this, rapid, quickly, quick movement, whatever it is, the first thing I do, morning, Richard, how you doing? The first thing I do is look for the news, because I don't believe typically, I think we're pretty much news driven, or, comment driven, social media driven, whatever, lately. Pretty disappointing. I hope you saved yourself the pain and suffering of yesterday, Richard. That was a painful day. And this could well be as well with another. This is the slowest couple of weeks in the year outside of Christmas and New Year in terms of liquidity and market movement, which now there's something important to understand about that. Low liquidity market can have two personalities. It can be boring as, watching grass grow like yesterday, or it can be extremely volatile because it takes very little oomph to move the market dramatically. And that's something to, keep in the back of your mind, especially when we have, Agent Orange and the Random Risk Squad lurking in the wings. There's a cabinet meeting at 11. He's been pretty active, fired a Fed governor. First time in history. For what reason, who knows? I don't guess evidence or facts mean much at this point. But there's a pretty spooky environment out there, and the thinner the market is, it's like the reason we trade the ES typically is because it is a liquid market. You can easily get in and out, and the market tends to respect levels and stops. It doesn't go sliding and skidding past much as if you're familiar with the NQ, for example, which is a much thinner market. So that's if the ES thins way out, you can expect a similar behavior to the NQ, in my opinion. Well, yeah, nor did I. Absolutely. I'm still working on vetting the IB thing. I've got about one more deal left. I finally got the drama sorted out pretty much okay with TopStep. And so, one more trade and I'm out of these evals into the XFA, so on 5. So I'm being really cautious and sticking to my guns with this IB continuation, or this IB vetting process that I'm doing. Which we're past 9 o'clock, so I guess I can actually talk about that here. I should say that my philosophy about trading is, if you want to have a statistically driven, consistently profitable trading business, then you have to realize that the market is random. And we are in an environment where statistics and probabilities are the way to trade. None of these things are some epiphany that I had. They are, unfortunately, I guess I sort of recognized them, and then that awareness was confirmed by the best, studying a bit, the best traders and hedge fund managers in the world. Ed Thorpe originally, and Jim Simmons, and Paul Tudor Jones, and Dalio, and Druckenmiller, and then coming down a little more in our retail realm, Tom the Trader, the best loser wins guy, and even down to Tom B and the Trader's Lab or Rod or any of these guys. It's all the successful people recognize that the market is random, and so the thing to do is identify a setup and the criteria which justifies entry, capture a statistically significant data set for that setup and parameters, and if mathematically, statistically, clear mind, away from the live market, you determine that it has an edge or a probability or an expectancy, pick a word, then you take that trade every time it presents itself. And you rely on the law of large numbers to manifest the edge to your bank account. And again, Google any one of the best people that I just mentioned or that you can think of and listen to what they say, read what they have to write or whatever, and it will come around to occurrences, probabilities, statistics somehow. Tom Sosnoff, any of those guys. And therefore, that's confirmation for me that what I suspected and what we all talk about on down on this level is the truth and is the way to go. As a business, not as a video game or as gambling or whatever else. And if those kinds of things are what you enjoy doing, and or most importantly, this is not a stream of my way or the highway. You know, this is the way I'm approaching the markets, and whatever you do that's consistently profitable, by all means, don't quit. Do it. Anyway, so that's the way I approach this, is from that point of view. And therefore, what I am doing is collecting those statistics on the IB trades, of which there are two. First, as I talked about early on somewhere here in the stream a while ago, the IB is the high and the low of the first 1 hour of the RTH trading session. So until 9:30, there's absolutely nothing to do except watch the market go by and see what kind of context is developing. And then at 9:30, and that's the reason I do this story with the whole market in view on my chart, because I have a real accurate understanding of context through so far in the day or the session. Then when it comes time that I may interact with the market, I can zoom in and get as granular as you want to get. I mean, Bookmap will go into nanoseconds if that can mean something to you. It certainly doesn't me, but anyway. And then if you get the setup and then the trigger and then the context, the setup, the parameters, and then the trigger, you put the trade on and you let the law of large numbers play out for you. That's the theory. Okay, so the IB trades, of which there are two. One is the IB failure, where this is not an IB setup, but it's an example of price action around the IB line because it's not 9:30 yet. We trade up here. We take the stat. We come back up. We don't get anywhere, and we start coming back. That's an IB failure, which is essentially a mean reversion trade. Outside in. Outside in. Those are mean reversion trades, which is another form of setup having nothing to do with the IB. So that's one you could work on if you choose. The other one is the IB continuation, which is, as the name suggests, it gets up there, takes the stat, and keeps going. And that trade is suggested by a directional market. The mean reversion or the IB failure trade is suggested by a rotational market. I chose these IB trades to vet because there are two. One is applicable to a directional day, one is applicable to a rotational day. So you have essentially both types of context, general context, covered with a vetted setup. And it's interesting or important to understand that in the trading year, there is a majority of the days are rotational as opposed to directional, typically. So it's good to have both. All right. And So that's how I do that and why. Now, if any of that sounds kind of familiar, it's also the business model of a casino. They play no game, which they have not previously identified an edge, and specific rules. Go to a casino sometime and tell them you don't want them to use a shoe. You want to just use one deck of cards, for example, or you want to change the rules on roulette and see how far you get. And you're not going to get too far because they know what their edge is. They know very well that there will be gamblers who win. And we should, as traders, understand that this is a random environment. The outcome of the very next trade is 50-50. And consequently, we're going to take stops. What you want to do is have a statistical edge or expectancy that over a large data set, you will have a statistically greater risk reward than you do risk in terms of winning and losing trades. And also that's important then that you have in your setup, you have a favorable risk reward within each setup. Like in my risk neutral setup, it's 12 ticks to 48 ticks. It's actually 12 ticks times 2, which is 24 ticks risk to 60 ticks reward. So almost 3 to 1. Meaning 3 steps ahead and 1 step back. That way you can compound and have more flexibility. Morning, Antonio. Bom dia, tudo bem? So that's why I'm doing that. That's why I'm vetting a trade and why we are all diligently working on them in the background here with static and every place and the underlying theme of everything Tom talks about and the group and the TLab. I think I didn't mention when I was talking about the TLab, in addition to Tom's philosophy and his altruistic sharing of everything, there's a great crew of people in there, and it's pretty mature. So that's another thing I forgot to mention. A lot of good people whose names I'm not going to try to call out because, I'll forget somebody. Rod, Antonio, Ned, Lefty, Garrett, on and on. Didn't matter. You see, I'm already forgetting. So, and that's, so there we are. I'm vetting the IB trades now. Got another 10 minutes essentially before the IB statistic is set. And then we'll see where we go. At this moment, following my new keep the whole day in view. Come on, keep the whole day in view idea. This is another day setting up like yesterday. What are we talking about here? We got 59 to 45. Basically 15 handle range in the first hour. Not particularly inviting. And when we have a real tight range like that, you notice how all the price levels are stacked up across here? Each one of these lines or levels provides an opportunity for price to react. So you might consider having a range requirement after your setup and your parameters and your potential trigger. Does it meet the range requirement? Because after all, our goal as traders is not to scratch. Our goal of traders is to compound our account. So if you're only taking trades which have, and the way my range requirement works is, if all things are good and I do not have an unobstructed path to my first risk neutral scale, that entry is not qualified. Risk and an unobstructed path means no levels. Okay? This is 59 and this is 56. Well, 56 half, isn't it? What is it? Yeah, 56.5. Okay, so that's not 3 points. If I was spot on accurate getting a short off the IB here, I don't have 3 points to my risk neutral scale before the developing value area high, which is definitely a level that price often reacts to. And you're seeing it happen right now. And below that, another couple of points of settlement. And then below that is the POC, which is the mean. Okay, so let's assume that you take the trade here and you get scale. Then where are you going? You got the mean, you got the RTH VWAP, you got the mid, you got the Globex VWAP. And then you finally get some breathing room down here to the overnight VWAP, which seems to have a hell of a lot of liquidity parked out down here at $1.66 at 48. You can see that by the thing. So I'm trying to look at this at a more holistic view, especially in these tight markets. Okay, yeah, maybe that's valid, and maybe there's just barely room to my risk neutral scale, but the point of doing this is getting to my profit target. Where the hell am I going? Just thoughts that go through my mind. And remember that the reason or the methodology of the stream here is that it is my journal, because if you've been around a while, you know that I'm a complete donut when it comes to multitasking. And I believe journals are important. So if I were to capture screens and type and do all those things, I would never get anywhere. And so the point here is that I have captured everything on my screens in the video, and my voiceover gives insight as to what I'm thinking. So that solves my journaling problem and hopefully a bit of my multitasking issues, and allows me to focus on what I hope is working, is trading. And I'm trying to articulate these things. I don't know about anybody else, but I find, and I believe it's an understood almost fact, I guess, or condition for sure. If you want to really understand something, teach it. Because in order to do that, you have to thoroughly understand what you're talking about, rather than just memorize something, go take a test, and 2 days later you couldn't understand. First of all, you didn't understand the theory behind most of it anyway. You just remembered the facts. And second of all, it's all gone. Now, I'm not trying to teach something here to anyone else, but I'm trying to articulate it and reinforce it to myself. And I realize that's probably real boring to, Richard and Antonio, or guys that are here all the time. And I apologize for that, but that's the point. And I'm sure they've got very familiar with the mute button, I would guess. Speaking of that, let's fire up the Mookie. Let's fire up the Mookie, boys and girls. This is the music that I finally ended up having to get for the stream, so that I was not being constantly bombarded with or at risk of copyright strikes and things, which are taken very seriously by YouTube. I ended up getting Epidemic Sound, a light subscription to Epidemic Sound, which allows me to stream their stuff without any issues. So that's that. And I don't spend much. I don't have any noise in here or speakers. If I want to monitor this music, I need to put my headset on, and therefore if the music sucks or if it's too loud or whatever else, drop something in the chat for me. And one of these days I should actually listen to there's thousands of stuff they've got over there. Listen to things and see if I can pick out some other playlists or whatever. I was looking for just a nice jazz, and they don't seem to have that, which I found kind of strange. This is Latin something, or loud. I don't know. Let's look, shall we? Okay. This is Relaxing Piano. Stupid video or thing of hers. The other stuff they have, this is the ones I typically go through, the laid back lo-fi, and I like the Latin relax pretty much, and there's some classicals not bad. The rest of this stuff I haven't even listened to. I don't stand and listen to music anymore like I used to do when I was younger. We always had music going when I was younger. I did. Little River Band, Led Zeppelin. I saw Jimi Hendrix live. you know. Yeah. Jefferson Airplane, the Eagles. Okay, well, we are 5 minutes away from the world famous IB statistic being set, and we're just snuggling around the IB high. Now, let me point out something really important. And that is I hope these timestamps start making some sense a little bit. I'm trying to add additional timestamps, which I can do when I think of something that's, I think, important to say, and then I will add a permanent one I can hotkey. I learned the really hard way, do not trade to a statistic. Meaning, okay, POC is above the VWAP, is above the mid, is above the this, is above the that, and we're at the trading up from our mean. So you go long, assuming that you're going to take out the IB high, and that's the statistic that will be set. You're trading toward the statistic. Now watch, I hope it doesn't make a liar out of me here, but watch this. It does this, and then it goes down and takes out the other side, or at least comes back through your stop. I found out the hard way by capturing the data of all my trades, into various different journals along the way, that's a real no-no for me. And remember, I'm talking to myself here. And it's kind of what figures into that migrating VWAP, which is another setup that, they use in various places, including the TLab. And Antonio and I joke with Antonio that it's our favorite trade because we've discussed previously, it's got to be the worst setup I have. It's the one that would be the most obvious. I mean, how can you miss the yellow brick road moving around here? This is a bad example of it because this has been a basically flatline day, but typically this will go up and go up and go up. How can you miss it moving? And the suggestion of the trade setup is that price will move in the direction of that POC, and that makes sense. The POC is the most traded price so far in the session. So if the POC goes from 54.75 to 60, suggests that the traders are comfortable doing two-way trade at 60, more so than at 55 now. But the parameters and then the trigger, absolutely the worst setup that I've tried to use, because and that's disappointing. But here you go now. We're not at 9:30. Here's a perfect example of don't trade to the statistic, right? I started talking about that right here. Now there we traded up there, we haven't done anything. We've pulled back here. We're getting lower lows and lower highs. And all we got to do is get one more tick down here, or one more point, and it would be a stop if you were trying to trade to that statistic or thereabouts. So that's a good example. There you are. That's a good example of my caution there. And we've got a minute and a half to the statistic. And we've broken way down here now. So remember that there are three positions in trading: long, short, and flat. And if you are a risk-conscious probability trader, you're going to discover that this is not, the rodeo that you thought it was going to be, and the majority of your time, in my opinion, is going to be flat. That will be the primary position. I'm trying to get over analysis by paralysis and get at least one trade off a day. But I'm completely okay, bored and disappointed and sorry for the stream but I'm completely okay with not taking a trade like yesterday. I didn't see any possibility where putting risk on was a good idea until very late in the day, or around noonish, 1 o'clock-ish, when we kind of got that IB failure, and it did work out. Today, same idea. What am I thinking about? And now let's analyze this statistic that I'm working on. As I said earlier on in the description of the IB trade and statistic, I don't know that I actually mentioned this statistic yet, come to think about it, but the IB statistic is an old market profile, well known for years. And it says the following: now we have crossed over 930 by 1 minute. So this IB high will not move anymore, and the IB low will not move anymore. And the statistic is active. Okay, here's where trading to the statistic is dangerous. Whoa, we're above all these levels. Oh, baby, we're going to get the IB high. I'm going long. Okay, no. Wait till that statistic has been hit. Then you can start thinking about zooming in and figuring out where you're going to trade, in my opinion. And the statistic itself is the following: there is greater than 97.7% probability in all 4 open types that the IB high or the IB low will be exceeded by price in the balance of the RTH trading session. And if you don't believe that, here you go. IB high or low. It's the top statistic. 97.7, 98.2, 98.3. In the day that we are, 97.8. This is our open type today. That's the probability that one or the other will be taken out at some point in the RTH trading session. It could be 1 millisecond after 930 or 1 millisecond before 1600. And as you can see, once again, if you thought you were a clever Trevor and you were leaning on the close and trading for the IB statistic, you're sweating bullets right now. You haven't been stopped, but you're sweating bullets, and you very definitely have not been scaled. So that's the first, foremost real takeaway I've gotten from this statistic study so far. But anyway, there's that. Anyhow, so let's get back to the IB statistic at hand. Now we know what the statistic is, and there's a couple of ways you can look at these also. Another thing that's important to know is, where did it go? There's a 31.5% probability that both the IB high and the IB low will be taken out in this open type at some point in the balance of the RTH session. You're just stopped out now after you try the clever Trevor off of the leaning on the close. But here's the real killer. Here's the real statistic that I find interesting. I'm sorry, it's a 97.6% probability that we'll take out one or the other in this open configuration. So that means that there's a 2.3% probability that we will take out, price will take out neither the IB high or the IB low. So if it's the later, last 30 minutes of the day, for example, and we have not taken an IB high or low statistic yet, and we're trading up here somewhere, maybe leaning on, now you've got a 2.3% probability that it will end the day that way. So that's a 97.7% probability that we're going to get one or the other. Those are pretty good odds to trade to the statistic at that point. But until then, not at all. Rad Ascar FT71, I watched a thing of him long ago on Big Mike, where he took the data out of IRT because he was a big IRT user in those days. He exported the data and he used Excel to demonstrate to the Big Mike squad how to do statistics. And the one he did was the IB stat. And his theory was, you can't really trade the original stat. And I pretty much agree with him. But what he thought of as a good probability trade was, let's assume we've taken the IB high. Now the stat is over with. And we're trading down here someplace, and the day is fairly rotational. We're trading down near the opposite side, and the day is fairly rotational. There's only a 30%, 35% probability we'll actually take the other side. So you've got basically a 70 or 65% probability if you got along down here somewhere that you're going to get back into the middle, at least to the mean. He thought that was an edge worth trading. He didn't think that the original IB stat was an edge at all. If you Google Big Mike, that's even before Futures IO or whatever he changed it to. I'm talking about, Jesus, probably 2015 or something. It's interesting. An interesting webinar. And when I'll never forget when FT was talking about the market as a random environment, and that the probability of the next trade was very definitely 50-50 because it's a binary event and it only goes up or down. Time is what we put on it for the horizontal movement. That place went crazy. Nobody wanted to believe that it was 50. Oh, but if if you've had 6 upticks in a row, the probability of it being a downtick has got to be bloop, 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 absolutely not, because of that old saying that you hear so frequently that you don't pay any attention to, which is, past performance is not indicative of future results. The next instance or outcome or trade or data point that is going to happen is 50-50, having nothing to do with the past. In fact, in the casino world, there's a name for that, and it's called the gambler's fallacy. And they love it. The casinos love it because the gamblers, oh baby, I'm going all in on black because the last 4 spins of that roulette wheel have been red. Probability's got to be 90% in my favor. Absolutely not. The probability of the next spin, the probability of the next trade is 50-50. And in the case of roulette and gambling, to be honest about it, it's less than 50-50 because in America, they add 2 green, 0 and 0-0, which further reduces the probability for the gambler. In Europe, I believe, there's only just a single 0, which is green. But it's the gambler's fallacy. Google it. It's really not as mysterious as we think it is. The only problem is when you start trying to predict and get away from your statistics and your edge or your expectancy. And expectancy is the win rate divided by the average wins, or multiplied by the average wins, minus the loss rate or loss percentage times the average loss. That's your expectancy. That's how much you, over a specific data set, 1,000 trades or whatever it is, over that subset of data, you expect to have that setup earn that many ticks. You have to try to get it. The reason I keep referring to a statistically significant data set is you want to have that subset of data outside, so that the occurrences are outside of the possibility of a random occurrence in a random string. For example, we all know flipping a coin is 50-50. Flip it 10 times and nobody's surprised to see 6, 7, 8 heads. Flip it 1,000 times, much closer to 50-50. That is a random distribution of outcomes, and that can be really dramatic in a small sample set. And the reason you want to be sure you're outside of that is A, your statistics are much more accurate, and B, you might have a fantastic setup, but you had the unfortunate luck to do your study where the random distribution was all losses, and you go, oh, this is the worst goddamn thing the worst damn thing I ever saw in my life, and you throw it in the garbage. Where had you tested it out over a statistically significant data set outside the the normal random distribution, it might be the most profitable setup of all time, or the other way around. You could think you've got the most profitable setup of all time, and because you just happen to be in a random distribution of all winners. And guess what happened? Trying to trade to that stat. Well, we're stopped out and then some, all the way back to settlement. Yeah, this is painful, isn't it? That didn't work out like I had a plan. All right, welcome to the stream. If you're new here or whatever, drop something in the chat and tell us who you are, where you are, how much money you're going to give us, thumbs up, subscription, all that stuff, all those things, or nothing, whatever. It'd be great, but fortunately, Antonio and Richard are brave and bold enough to say hello and interact a little bit. Probably mute most of the time because they hear the same stuff a lot. I try to go over the same basic things daily to reinforce in my own mind, and for the sake of someone new coming to the stream, I really believe, in all seriousness, that your subconscious mind believes what you tell it. And I think there's, studies behind that, but I don't want to say that out loud because I couldn't quote them. In other words, I just can't, I don't know how to control myself. I'm just an overtrader. That's all I do. I can't control myself. Then by God, you're going to be. If you verbalize that, you're going to be. I think. So that's another part of this stream is I'm continuing. First, I have to do the narration or the voiceover in order to get what I was thinking into the stream, recorded in the stream. And second of all, I'm articulating and verbalizing only positive stuff about trading, or that's what I try to do. We've got a little crazy Ivan going on here. Don't ask me why I decided to call him that, but look at this thing. Wow, this looks like a EKG and the patient died right here, huh? They got my TopStep as expected, pretty much came right with that drama with the accounts. For whatever reason, the support says they could not re-associate the one account with rhythmic data, but I had a spare one that I had never used, and so that one is already associated, and they've attributed the balance of the one they could not, and that was closed erroneously, to the one I had not used. So I do have 5 active on the trade copier. In the next trade, then all 5 of those would cross over the profit target into XFA. So that's pretty scary that they rolled out this TopStep X thing so in such a basic beta format that they, and the associated back end that they can't deal with that. Really, it's pretty. I guess hurry up and they were all excited. I guess what to say, but at least they were up front. Stand up about it. So we'll see what happens next. I just want to get these over into the XFA and get some money made, and then if they give me when I get a live account, I will do that. And according to what I keep asking and I keep having confirmed, because I am trading with Rhythmic and Bookmap and all this crap, when I move to XFA and when I move to the live account, I will be able to trade this same data and the same setup. So we'll see. And there's a lot of people that seem to be making money like hand over fist and doing great with TopStep X. So good for them. I'm not one of them. Maybe it's just because I'm closed-minded about it. And to be honest, it would be great if I could figure out a way to use it and make money consistently and not pay this overhead for all this charting and crap. I pay for MBO data. That's like $40. I pay for Bookmap. I pay for IRT. TopStep X is free. And if you trade with TopStep X, the data is free. And they claim, and I don't know how this works. I have a suspicion, which I'll keep to myself. I'm going to start a separate podcast where I'm, Alex Jones, the conspiracy theorist. But they claim that if you trade with TopStep X into a live account, you're not charged for your professional data stuff from the CME, which I find pretty hard to believe, if in fact it's really a live account. What I know up until now is the only way you could ever not be pro status if you're paid to trade is if you weren't trading live. But it's real easy to test if you get into that. If you're on a live account or if whatever. Now on TopStep X, I will say this also. On TopStep X, if you don't pay for level 2 data, which is the usual $40 or something, you only get in the inside in level 1, which is the inside bid and ask. So none of the liquidity is displayed right now. You're getting 16.95 right here. Bing bong, bing bong, bing bong, bing bing. That's all. But what I was going to say was the way you can tell if you're really in a live account is if you come down here somewhere way out of the market and you see, there's 39 at 64.42, and you throw in a resting order for one contract or however many you want. If this 39 goes up to 40, that means you're in a live account. If it does not move, you're in trading sim. Simple. God. The more I need to be into the money-making part and the more critical my situation becomes, the market does this. The more flat the market seems to get. I'm going to go fill up my tea glass here, so you guys get ready. I'm sure something will happen. Trump will say something, and it'll go 1,000 points one way or the other, so that's always happened. No, huh? Well, sorry, I tried. I suppose now... No, it's only 10. I've noticed some variation in... What the hell is this? Scope Ratings Agency. French government collapse most likely outcome. What the hell does that mean? I guess up here that there's a political impasse. Oh, I saw something about the socialists screaming and yelling about something. The cabinet meeting at 11. I want to point out here that Financial Juice and my other news in investing.com are both free. And you can set up the filters for your time zone and whatever you want to see. Here. On Financial Juice, it picks up the time zone from your computer, supposedly. But you can filter out events. And like I say, the docket here is similar to investing.com as far as reports go. But it's got more of a squawk box feel over here on the right in this column. And it's free, but of course, if you're just dying to spend money, you can do so. So tired of this drama all the time. Oof. And God, it's just getting started. We got like 3.5 more years of this crap. And then who knows what, you know. They're slowly militarizing or making a police state with, you know, troops on the ground in all the major cities. The theory being, I suppose, that in the next last January 6th, the last go around, they weren't very well organized, and maybe they're planning for that to be a slam dunk this time. I have no idea. That was what was suggested by Bill Maher, actually. If you know who that guy is. So anyway, here's our reports. The next random critical risk is, you know, Agent Orange and the random risk man taking the stage at 11, I guess. So there's that. Here is our hurry up and wait day. I suppose the most valid bit of advice I've shared so far is to not trade for the statistic. I can't tell you how many times that, you know, and isn't it an interesting thought about someone's behavior, in my case, my own behavior, that I was in, you know, oh, I'm going to get ahead of this. I'm going to be, you know, faster than Johnny on the spot. And then you get salt pounded in your butt every time you turn around, and it takes you a while to figure that out. Crazy. It's real important to try to keep aware of what you're, you know, keep in the here and now, I think. Also, I think it's important to be aware of the fact that those feelings that you have, like FOMO and revenge trading and all that kind of stuff, are baked into your subconscious from, evolution. And you're never going to eliminate them, or I'm going to get rid of that. No, you're not. What I believe the correct thing to do is be here and now and aware and recognize when those thoughts and emotions and those chemicals, that adrenaline drop happens and don't act on it. So, Tom Antonio Tom's joke about Hyde, Dr. Jekyll and Hyde, Hyde is there right on your shoulder talking to you. So it's same theory. Everybody has the same idea, but you don't think that you're going to eliminate those thoughts because they are part of the wiring that we've evolved with, and it's what kept us alive for fear and things. Kept us alive, and trading is kind of the opposite of those innate tendencies. We look to put on risk rather than be risk adverse. That's how, you've got to put on risk to take a trade. You could never take a stop or never put on any risk and just, shut the thing off and go do something else. As far as trading goes. But that's obviously not. You have to determine a way to minimize your risk, maximize your reward. Only trade things that have a positive expectancy. And that's, I believe, how it will work out, how it works out in your favor. Look at this crap. Oh, I'm so sorry for whoever thought that was going to be the way to go. Damn near 10 handles, right? And if you're not vetting a trade, and if you're doing mean reversion trades, and that's a setup that you have identified and you're vetted, or you have an edge, that, knock yourself out. Good for you. We came up and got it. We tested up here and we couldn't get any higher. It's the outside edge. It's mean reversion. You got short. You got scaled. And you're holding on. Now, wouldn't work in my case because circle back to those, range requirements. But that's individual. Individual. I did it again. Sorry about that. I don't know why I'm having an issue with getting on the wrong window here and not getting back, but thinking, I guess. I'll have to Google if there's some way that I can, with OBS, that I can automatically switch screens to wherever my mouse is or something. I don't know. Or maybe just pull up my boots and do it right. Interestingly, I think it's real interesting that we had this big, gigantous, P-shaped, irrational exuberance on Friday and this big string of singles. Typically, I don't know any statistic about it, but typically if, the thinking in market profile days was as you get back into a string of singles like this, you lead them up, they'll trade through them because they were lightly auctioned and they need to be repaired. Dalton people make a lot of conversation about that. But look what we're doing. Yesterday we did overlapping to lower. Repaired this bunch. Today we're doing the same overlapping and lower. We're down to here. Pretty soon they're going to be across this whole string of singles and there won't be any real run involved with it. That's kind of interesting, I think. been working a lot on statistics, trying to vet the trades with back testing. That's the key. Another thing about capturing the data for your data set of, to vet a trade, it's best to do away from the live market. If you have coding skills or whatever where you can do back testing, it's a hell of a lot quicker. I mean, if you want, let's say that you determine that a statistical data set, substantially, data set outside the possibility of random distribution is 100 trades. Well, you've got to have 100 trades set up exactly the same way. And it's real important that you understand that, or that I understand that. And I remind myself frequently. The setup, the criteria, the trigger, the stop, the T1, the T2 have to be identical. And any other parameters, the context of the day or whatever, the phase of the moon or your girlfriend's attitude, whatever the hell it is that you're using to determine, to identify a trade from the most general down to the most specific trigger and entry, have to be the same while you're capturing the data to vet the trade. Because if they're not, you're not comparing apples and apples. How can you possibly say, I have this setup has a probability of achieving T1 60% of the time over 100 trades. If T1 was 3 points this trade, 10 points that trade, 1.5 points this trade, it's impossible, right? It's stupid, is what it is. You're kidding yourself. So they have to be exactly the same. Now, after you have the data captured, after I have the data captured, and the statistic and the expectancy figured out, I can then be a little more flexible. For example, rather than having a fixed T2, I can adjust that T2 to a high probability target in the day. For example, never, ever in a million gazillion years would you widen your stop out from your entry. Now, if you start vetting a different process where you have, instead of a 3-point stop, you have a 5-point stop, and meaning a 5-point risk neutral scale, then you got to capture a completely different data set. Or the statistics are meaningless. Real important to know that. I mean, it's real important for me to be aware of that continually, because that's a real easy thing to do. And humans have a real strong tendency to only remember the good things and to block out the bad things. That's why you put on a trade, comes back towards your stop, you turn into a wuss, and rather than take the stop and hold your principles, you move the stop away from entry 2 points and you don't get stopped out. And then the trade turns around and goes your way. You will ultimately remember how well it worked out that you moved your stop in that case, and your mind will generalize that, rather than all the countless times you moved the stop and you took a worse loss than you would have if you'd have left the stop alone. That's a factor of human nature. They say, I have no clue, but they say that if women remembered the pain of childbirth, the human race would have died out in the first generation, and maybe that's true. I don't know. I'm not a woman and I don't know that pain, but I got to imagine it's pretty amazing. I have to imagine it's pretty amazing. Yeah, here we are, boy. This is as much fun as you can have with your clothes on right here. I'm telling you what now. Look at this noise. What have we got? Well, we're 44 to 62, so we're just almost 20 handles wide. None of which work into my the process of vetting this trade that I'm working on. But if you're mean reverting, if you're mean reversion, got some mean reversion setup that you vetted, and there's one. Rod and company are working on a setup, which this I think sort of qualifies for. It's a deep V reversal down here to the, put that in as a V reversal and then get long and up you go. That's viable, I think. Not any part of my stuff right now, but there's one for you to think about. What else? Let's see here. We've been working collectively on a statistics for IB failure and IB continuation, which is convenient for me because that's what I'm working on now with my vetting, my personal vetting in static. So we shared. Rod put up a Google sheet with a buttload of trades, a couple of 3 years worth of trades around those two. And then we've been kind of divvied them up amongst ourselves and are going through them to confirm against our charting that the data is correct and, green or red if it is or isn't, to further refine that for statistics and his AI stuff. That's pretty interesting, and I've been getting somewhere with backtesting in IRT. Might talk about that here in a minute if things continue to get this boring. And I'm, the minute Agent Orange, I love that. Richard came up with Agent Orange. If anybody's old enough to remember Vietnam or been around in the Vietnam War period, Agent Orange was a real horrible atrocity that the Americans cooked up. And pretty funny. That's been, and so perfect an analogy for him because of that bizarre makeup. I don't know why. I've seen a lot of things about why he does that, and apparently he does that makeup stuff himself. So they say. I don't know why. If somebody said you look like a fool a million times, you'd think you'd do something different, but I guess not. I guess there's a different level there of, I guess. Anyway, one thing to point out here that I just noticed, these volume dots, bubbles or balls or whatever you want to call them, in my book map are colored by delta. So obviously there's buying and selling been going on in here. But the aggressor turned out per delta to be buy, so that's why it's the green color. There's a sell delta, and there you go. They can be 3D, but I figured that was just a waste of computing space, computing time. And now that I've whittled these way down and we've had some kind of low volume opens, I'm really at a loss as to what to think about this volume profile thing. Especially since it worked so perfectly for long years, and then boop, all of a sudden weird. And I've updated 2 different systems or whatever, thinking that was just a glitch in the latest version or something. So I don't know. Yeah, here we go. Now we're at the mid. Now we're back to the VWAP. Here's the VPOC. 53 to 56. Well, and there's 2 levels in the way. There's no range there. And these are big levels. the VWAP, the current RTH VWAP and settlement, you know, those are some pretty substantial levels where price is very definitely has the possibility to react. You can see how many times it reacted right here off the VWAP and the mid. These are structured trades in the TLab and other places, you know, mid VPOC or the VWAP VPOC, but they're all, you know, they have to be in the proper context with the proper amount of range for your trade plan. Oh, this is exasperating, huh? Well, let's take a look maybe at, I'll hang on until at least 10:30, I guess. Once Trump starts, the cabinet meeting, that's got to be a real, the ultimate reality TV. If you're old enough and you remember The Apprentice, that was the reality TV show that they did with him. Boy, the similarities, and so especially in the cabinet room, you know, the cabinet meetings there at his desk is pretty reminiscent of those old days, the TV days. Something's going on here now. Okay, so here we are, a point high, all the range in view. And so what? Much to do about nothing. Pretty tight rotation, in my opinion. Not exactly opportune rich for what my purpose is here today. Which I realize is boring, but got to stick to your guns, I guess. Need to stick to your guns. What's going on around the horn? Well, we continue to trade down into that, as I was talking about yesterday, earlier, and that here's that big Friday moonshot to the moon, Alice, and the string of singles. That's represented by this candlestick here. Here was yesterday, and here's today. Day before yesterday, today. So tight a range and so little volume that it's can easily have 3 RTH sessions in here, whereas a lot of times you can't even fit one very easily. Here we are with the NQ. Yeah. Not much to say or do. I'm sure that somebody's trading them somewhere. And, good for them. Hopefully making lots of money. The old theories of scalping and whatnot were that and it has got validity. You learn how to trade in your skill, like any skill or craft. Practice makes perfect, right? The more you do it, the better you get. More normal it becomes to you, and etc. And that was kind of a philosophy that somebody applied to scalping, because scalping means you take a lot more trades in the day. So you essentially gain more experience. But in these markets and under the circumstances that I'm functioning under, I need to approach it from the opposite side of the coin, which is limited risk exposure to the market with maximum risk reward. And to compound yourself. I'm not trying to get 10,000 trades in a year, win, lose, or draw, with a 2-tick target or whatever it is. I mean, they used to trade for ticks. Those bandits and those guys, they traded for ticks, man. And I mean less than a point ticks. Well, that's been replaced by algorithmic trading, and nobody can trade that fast, but that's how they do it. If you take 1 million 1 or 2 tick profits in a day, you've got a substantial amount of money. And that's how they work. But you have to be in an environment where there is absolutely the minimum amount of latency and no commissions, and your trade costs and your access and all that data costs are all, in another realm than we function in. There's a guy in TopStep named Jack in the TopStep TV, one of the old timers, younger fella, but one of the original TopStep guys with Hogue and Eddie and of course Patak, who was traded in a prop shop back in the day, apparently. And the outfit he traded with was the company that rehabilitated the old microwave networks so that they could transmit their data by microwave from Illinois to New York or New Jersey to gain that much of an edge in speed. And the desk fee, his desk fee, just to walk in every Monday of the first day of every month and sit down and trade was $12,000 a month. There was a group of proprietary programmers that developed all the stuff. You know, so there's so many different strata or levels of this business. It's phenomenal. George Soros basically broke the Bank of England with a short on the pound. Henry Druckenmiller was the guy that was actually in charge of it, but it was at Soros's. I think what I heard, I don't know, either you can find out about it online, but when Druckenmiller came to Soros about it and said, "Oh, well, I'm going to do this. I think we've got a short position building on the pound here," and Soros's only commitment was, "Well, why didn't you do more? Why didn't you take more?" You know. And they ended up holding that short, and the Bank of England had to halt the trading because they were gonna hammer him, and he made like $1.5 billion or something in that one day. It's an interesting story. I probably got the facts all backwards and upside down, but there's a guy that does a podcast that I think is, first of all, he's really intelligent, a lot of experience in this business and in the finance business, has no use for day traders, by the way, day trading, by the way. He's a professor at, I think, Lord's or maybe London. I'm not sure which college over there now. Worked over here in the States for a long time for Niederhoff and Company. Had his own hedge fund. His name is Peter Boyle. And now I think he's making cubic money on via YouTube stuff because, and I don't know whether he still teaches or not, but he gave up he sold his hedge fund, I believe. But he's got a great sense of humor. He's Irish, but he has a great sense of humor and a very intelligent guy and has a lot of good, well-resourced, researched content. So Finance with Peter Boyle, I think it's called. It's a YouTube channel. And it has started a spin-off podcast and whatnot, but yeah, Peter Boyle and Finance, I think is what it is. I recommend that one. Great to listen to and fall asleep and stuff. Always has some humorous content in there. And some pretty surprising statistics and things. There's a great one on the NEOM if you want to. The line, you know, that thing they were going to try to do in Saudi Arabia. Some statistics that get put forward like it's real simple, especially the Elon Musk's portion of it, which was going to be the Hyperloop. And when you break it down to reality and the reality of it, so drastically impossible, it's beyond laughable. But on the surface, you know, that moron just spits something out like he's kind of like other people that we see on the front of a camera lately that say anything, whether it's and act like it's a fact, and it's just such crap. It doesn't even matter. That thing with the Hyperloop was really funny, and the NEOM, the line, all the stuff about it, but including the Hyperloop was funny and very interesting. And this is trade today is neither one of those things, funny or interesting. Well, it's about Tom time there. If you're awake, Antonio, I don't know what's going on over there. I'm sure they're busy. I'm sure there's structured trades happening all over the place. Maybe, I don't know. I'm going to I think maybe discuss the back testing a little bit here. Something that you need to consider or remember, and I need to remind myself of it, depending on how and when you were raised. If you were like me, you were raised with a real unparalleled work ethic and the philosophy that, you know, your reward is directly responsible for the effort input. And that's absolutely the opposite of trading. Now, in the actual trading, a lot of effort, a lot of time goes into the preparation, back testing, identifying the setups, all those kinds of things, yes. But the concept of you need to be in a trade all the time, that is a fallacy put out by brokers and prop firms that want you to go bust and pay them more. Brokers want the commission, you know. That's how they make their money. Think about it. Well, I think I'll spin over here and take a loop through back testing if anybody is interested to see about that. I'll show you what I've been up to here with IRT. This is how you go about getting your statistics, and this is one way. I've tried teaching myself Python. I got to a point where I could, you know, I downloaded, I exported data from IRT, I imported it into Python, I set up all of the different, I got as far as coding up the risk neutral trading system that worked accurately that I use here. Could change the amount of contracts, you know, with variables. But as with anything, and I'll show you that here, it's with real life on the, you know, when you're clicking the mouse or when the computer's clicking the mouse, the rubber meets the road at the context and the setup and the justification for an entry. That's where the rubber meets the road. I mean, that's the most important part. So the way backtesting works in IRT is you set up a trading system. In this case, this is the IB continuation. You build rules, and each one of these rules have something they do. If they, you know, for example, this is the short entry rule, and when it returns positive or plus 1, it executes a sell short for 2 contracts and at a price of V50. This is a user variable. And then each one, this is long, and then there's the main that doesn't do anything, that sets up housekeeping. Stop, T1, T2, and in the case of programming, unlike at Bookmap with multi-brackets, which is real handy, you don't have to define long or short. You set up your stop size and you set up your targets, and the program is smart enough to know if you've gone long or short, you know, and it adjusts those positions correctly and accordingly in every kind of program I know of, programming I know of, including IRT, you have to do a full set for short and a full set for long. And then these are the end of day things. So, you know, if you're still in a position at a specific time that I can set from the end of the session, it'll close the account, close any open trades. So let's look at the rules for a short. And those are the trade rules for the short entry. And it has to be, you know, you have to tell a computer each and every exact step required, because it doesn't think for itself. It follows each and every step precisely. Same way with long. And then you can set up a back test here. The instrument, the contracts, the session, the reports I want to see. In this case, looking back over the last 20 days, let's see what happened. I don't know. And you can do one of two things. You can, well, first of all, you can say, okay. And then you can either run the back test itself, or you can push it to this chart here, which I can do both of, I guess, but let's do the back test first. Pretty quick. It took 1 second to run that. So it only netted $3,500 over 20 days of trading. It took 23 trades, 10 long, 13 short. Capital traded, you know, there's a lot of statistics in these reports. Profit per day, profit long, profit short, on and on and on, trades per day. And if you, come on now, boy, this is not, IRT is just not doing right. It also does a buy and hold, so you can compare buy and hold against what you've got as far as your number and as far as your statistics on your backtest are. And this is the daily summary, consolidated summary, which is a good spot check for me, because I know that 12 points, 12 ticks for a 2-lot. Unfortunately, IRT, I can't set this up for ticks. I can only set it up, or at least I haven't figured out how. Only set it up for, it only reports in dollars, which is disappointing for me, but anyway, I know that 2 contracts, full stop on 2 contracts, 12 ticks each is 24 ticks total, and that's $300. So this is correct. The largest losing trade is $300. So that gives me some assurance that it's starting to work right. I also know that if I take both trades, both profit targets on my 2-lot setup for a total of 60 ticks, it's $750. That's correct. And this average and all this different stuff. And what's happening here is that my win rate in these last 20 days on this particular setup is 39%. What it doesn't compute anywhere, or that I have been able to find yet, is expectancy or probability for, you know, like T1 and probability for T2, that kind of thing. Those have to be calculated yourself, myself. And I do that, you know, just calculator, Excel, whatever. And then it also plots. Come on. Jesus. Boy, I tell you, sometimes IRT is just why that's thinking about this, I don't know. Why I can't open this up now, that really irritates me. I don't know why in the world this thing would be lagging about something at this point. Now it doesn't want to do anything. There we go. Okay. Now what it will do is give you the exact specifications of each trade in those 20 days. The date, the time, the entry type, the results, buy, stop, T1, T2, whatever it is, and the result of that in quantity and symbol and blah, 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 and then the profit, which is what we're all looking for. So here's a full stop, here's a full stop, here is a trade to both targets. Here's one that had to be closed out at end of day because it's not at a normal amount of money, and yes, there we are, end of day. So we got the T1, and rather than hold, we ran out of time in the day. I don't see any, interestingly enough, here we go. Here's a scratch, T1 and then a stop. So that's how it works. And that's the way to actually really backtest something. Now, this doesn't generate the kind of statistics that I would like. I have not figured out how to yet. I want to know over those 20 days or these 100 days or whatever it is, what percentage of the time did I achieve T1? I can do that easily by taking the data off that report and then throwing it in Excel or wherever else it is and doing the calculations myself. But I'm sure this program's got a lot more ability to do stuff like that than I do. So it would be, I guess, easily to figure out. The unfortunate part with IRT now, Chad Payne was the lead developer and a super nice guy, really helpful. If I ask him this question, he would either add those functionality to the program or tell me how to do it. And there's nobody to do that now that I've bumped into. Bill Lynn, it's William Lynn or Bill Lynn who started it, Lynn Soft, right? And I heard he's retired and gave it to his daughter, Eddie something or other, is kind of the lead or senior supporty kind of guy now, and I had a back and forth with him for a while, and he said, well, you can't really do that anymore. I had copied exactly verbatim, line for line, actually downloaded it from IRT's website, a setup that Chad had programmed, and it was not working. And he said, oh, well, we had a new update in the program and those don't work anymore. You can't really do that where you have multiple targets and all those kind of things. Well, that was pretty disappointing to me, but I forged ahead, and as you can see from the report, you can do that and you can do it reliably, which I figured out how to do. So the next thing I'm going to work on now, because we have been doing this in static, besides the IBC, I'm going to work on the IBF, which is the IB failure, and I'm going to program it exactly like Rod's done and we've discussed in static, and see what kind of results I get out of that. So, yeah, there you go. It's 11:15. I'm in heaven. Or maybe not. The push to the chart. So that's something that's kind of interesting, maybe. So now if I want to push that back test to the chart, I just go like this. Boop. And okay, and there we go. Now it's applied these to the chart. Here's the first trade of the IB continuation, which gets stopped out. and it ended up making 48 ticks. So it goes on to my second try. Another issue, I don't know if it's an issue or not, but something to be aware of if you use all of this with multiple, and I'd be happy to share these, any of these if you want to do it yourself. And the great part about IRT is if I just copy the definition for this chart and stuff, give it to you, you drop it on over an IRT window and it'll suddenly just populate all of this and you'll have everything right in front of your face. Pretty cool. I mean, it's a great program and that's why it's been real popular for, I guess, 20 years or more. Anyhow, back to the point at hand. It doesn't total, for example, here's the entry, here's the first target, T1, and here's the second, T2. But it only totals, or it doesn't display the profit of T1, nor does it add them together. It only shows T2, and I don't know how to make it do that. That would be nice. This is not 48 ticks. And I'm going to get rid of this thing here because that makes it, screws it up a lot. I want to, it's not 48 ticks, it's 60 ticks. And this is not negative 12 ticks, it's 0 because it's a scratch. There was, well, it's supposed to be anyway. So those are things that you need to be careful about or be aware of. And these green lines, of course, are just the charting. There's just the IB. So that's how this works. And then you can just, scroll back and wherever you see those lines. Let's go to, oh, I'm way back here because I was doing something in Rod's stuff. We go. So here's a plus 12 ticks. It's also goofy. How can that be? Oh, this is the end of day. Oh, no, yes. Yeah, let me explain this. I have set the end of day parameter at 300 minutes from session close because I wanted to isolate only the IRT1 because back in July 7 in those days, instead of scrubbing the holiday completely for the short period, a short session of around the holidays, around the 4th, that short day is in there, and that was grossly screwing up my statistics. So I changed the overnight to, in this case, 240 bars from the session close. So that's why this is closing out at 12, basically 12 o'clock, because that's when the thing is telling it to do so. And you can see that also right here. But if the way you read this is, if the high is less than or equal to the session statistics IB high, low, and the high minus 1 bar is greater than the session statistics IB low, and the position from the session start is greater than 60 minutes. In other words, the first 1 hour, so the IB is a real statistic, and position session close is greater than 300 minutes, then it sets all the rest of this stuff and it enters the trade. There you go. That didn't make sense, I don't think. Oh, yes, it is. Right. And then it plots the, so what it does here is it plots for as long as you've got the data. When I do the back test, it's set by the back test setup, which is this number of days. So 40. Okay. Back test. 44 trades, 20. This is funny, isn't it? 22 and 22. Exactly even long and short over 40 days. Net profit of $10,425. The parameter, the first one, of course, is always to look for, is it doing the things right? $300, 750. So far, so good. 47% profit, win rate of 47%. What doesn't show here, again, is the risk reward, because that's the key for compounding the account. But that shows you right there. With a win rate of only 47%, it's pretty profitable. So there has to be a win-loss, a substantially good win-loss ratio. Boy, this is irritating. And here they are. There's a scratch. Oh, man. There's a scratch and a full stop, and got to be, I don't know why this is. Yep, end of day. That's exactly right. And that's the 2nd of July. This is another end of day exit. Here's a full, both profit targets. So that's how the back testing works. That's how you can become confident or not that you've got a vetted trade and a vetted setup. Now, I'm excited to take Rod's statistics, which he so graciously shares with everybody, and his specific rules, and see if I can code up the IB failure and get similar results to what we've been working on with his data sheets and stuff. There you go. And I suppose at random risk, and oh baby, they're getting all excited. They're putting on their makeup and fluffing up their hair, and they're really getting ready to roll now. I guess. Hi, Panda. How's Panda Dana doing? Panda's come here to, hey, take care, Antonio. Panda just came running in here to say goodbye to you, and now you're gone already. Oh, well. You say goodbye, Antonio? She's a cutie. Yeah, let's go get a cute girl. All right, well, here we go on 11 o'clock. And let's see what we see here. Yeah, here we go. So here's the beginning of it all. It's so funny how they do everything they do. Every headline starts with Trump. Obviously, he participates in a cabinet meeting. Wouldn't be a cabinet meeting without him. I just noticed that the other day. Anything. Yeah, and I will definitely recommend you to go chase your significant other around the couch or do something else while this is going on. Who's this guy over here? Rubio? No, Hegseth. That illustrious Bondi. He's got all the close-knit crowd there. Okay, so there we are. And here we go. And I am definitely on. Not remotely interested in trading. Because of all the things I mentioned earlier. Not anything political, but it is unknown critical risk potential. If you're a project manager or a business owner or a parent, you want to, whatever it is you're doing, you want to identify potential risks and work out a plan to mitigate those risks. It's actually a workflow in project management, but think about it. If you're a parent, you want to be sure your kids get a good education and good health and diet. And if you're a business owner, you want to make sure that you've got your inventory, and all those kind of things. Same idea. In trading, it's the same thing. We want to be sure that we want to make sure that our ultimate objective and job, which is to maintain our account, is accomplished. And the way to do that is with risk management. And the only way to properly manage risk is to know what you are risking. And in the case of an unknown critical risk, like the opportunity for anybody in that cabinet meeting to say some random thing that nobody's expecting, could be very serious. Could have more impact, especially as I mentioned earlier today, especially in a lighter environment, a light liquidity environment. Could have a huge impact, more so than in a regular environment, because there's just more. We're now down to 64% of average. And our ATR has dropped down to 3.5. Yeah, okay, well, I'm going to go take my own dog food here, eat my own dog food, and go see if I can ambush Mama out there. I hear her cooking, so this could end up in a lunch event. You never know. or brunch, I guess it would be at this point. But I am definitely not going to be thinking about trading. And if it goes shooting up here and does something, great. Remember now, I want to be sure and point out to everyone, we have not taken the IB statistic yet. That's pretty significant. That's a pretty big deal, actually. Remember that statistic of 2.3% probability that we close the day without taking either one of them. Pretty unlikely. Does that mean you should trade towards the statistic? Like right here? Absolutely not, just as I pointed out right here. You got stopped out, toot sweet. The statistic is only in play, and your trade should only be in play once the statistic has been met. Now, in my case, I'm vetting the IB statistic with either the IB continuation or the IB failure. If they go up here and take the IB statistic, I'm not even going to be interested in looking at it because of the unknown random risk environment we've just entered into. If this would happen an hour ago, yeah, that'd be great. Or maybe later this afternoon. I tend to stay away from anything past IRT1, which is you take the total number of minutes in the RTH session and divide by 3, and you got RTH 1, 2, and 3. Anyway, now we're into the cabinet meeting, and they may not say anything, what the hell? They have cabinet meetings all the time. This is the only administration where all of this stuff was reality TV. It was public. Did you ever see, I don't remember ever seeing a cabinet meeting of Obama or Biden or Clinton or Bush. Certainly never remember ever seeing anybody signing executive orders. This is a reality TV version of our government, which is we've entered a new thing. Social media, communication and policy by social media, and reality TV. That's pretty much the way I see it. So my advice is, throw your mouse out the window or turn it off or sit on your hands or whatever you need to do to just be an adult. I approach this whole psychological trading idea as people make a big deal about it, especially people like Steenbogger and all these guys. And what is their motivation? They're selling books about psychology of trading. I think if you approach it positively, that you're an adult. You don't do any of the other things that adults don't do. And you don't overtrade. You're an adult. This is a business. It's not a video game. You're not clicking the mouse like you're killing snakes. If you are, that's fine. Play the video game. Click hell out of things. But if you're approaching this as a trading business, then you're an adult. Be one. Do you go to the bathroom in your pants? No, because you're an adult. You don't overtrade because you're an adult. You don't have FOMO because you're an adult. You have FOMO. We all will always have FOMO, as I said earlier. It's in our wiring. It's in our DNA. But you recognize it and you don't trade it. You don't react to it. Just like it's really important to be well hydrated, well nourished, well rested. You don't go out and get, commode hug and drunk until 4 a.m. and then come home and jump on the screens and start trying to trade and expect to do anything good. It's just the same as you don't drive your car, or you don't go to work, or you don't do anything else. No different. You're an adult. That's how I look at. And if you adopt that mentality, you'll be amazed at how all this psychological crap you've been worried about just disappears. Because, right. That's right. I don't do that. I'm an adult. And you don't even think about it anymore. Give it a try. It's interesting. Another thing you can give a try is Another thing you can try out is while this kind of thing's going on, these are things to do that are productive to do with trading, and you're not sitting there wishing you were trading or, any of those things. Take a pencil and a paper and write down step by step each element that leads up to you taking a trade for whatever setup it is you're going to, do, and write the name of the setup on the top. Okay, context is this, the POC is there, whatever it is. See if you can do that. And that it is clear and succinct enough that you could post it here in the chat or, email it to me or whatever else, and someone else could trade that setup the way you've written the rules. I can't do that. I've tried that, and it's one of the problems and why I'm focusing a lot on trying to set up the back testing, because you have to do that. If you're doing back testing, there's no way you can, put a rule or write computer code that is discretionary, basically. I mean, you can to a certain degree. If it's above here, then I don't do that. If it's below there, but those are if-then statements. What I've discovered with vetting these IB trades, it's all pretty clear and pretty rule-driven for me, right down to the final decision to click the mouse or not. And I've noticed in myself that is still discretionary, which is not very good. So there you go. Mama's calling me, which is usually a good sign. I'm either getting kissing or fed, one of the two. All right, so there they got the IB high. Oh, nice. Lovely. Is that Riskathon still going on in the cabinet deal? I suppose, huh? So, yeah, welcome to the stream. If you're just passing through, throw something in the chat. By all means, thumbs up, subscribe, send money, all those things. No problem. Well, yeah. In most other circumstances, this would be a fairly the thing that I've said about 1,000 times that you need to be aware of is look at the range and look at what we're doing today. And at this moment, we have the unknown critical risk component in play. It's a rotational day, very definitely so far, suggesting an IB failure, which would mean this trade down here and not get anywhere, and then trade back towards the mean. IB failure is essentially a mean reversion. For me, however, in light of the risk threat right now, heightened risk threat, the real small ranges between the various levels, there's no range requirement. And even if let's assume, well, 6, 4, 7. If you get short up here and you're trading back to the mean, what have you got? 7 handles. So you're scaled, but you don't have the continuation to get to the profit target. In my case, I'm not interested in scratches. That is putting unnecessary risk on. What the key is to A+ setup that's going to get the profit target. Nothing, doesn't take away at all from the risk neutral scale and the importance of that psychologically and every other way. But, think about it think one step further than that. What is your real goal? Your job as a trader is to preserve your account via risk management and to compound your account by a low risk reward within the parameters of your vetted trade and expectancy. That's it. I'm pretty sure that's it. And what's going on? Furniture tariff. Jobs numbers are going to go through the roof from new hiring. Of who? Okay. Well, that's still going on, absolutely. So I'm not even remotely furniture tariff. What the hell? Okay. well. Yeah, remember that financialjuice.com and economic calendar or my stuff with investing.com both are my news sources, and they're both free. I can't bring myself to read all this stuff all the time, so I stay away from it. I know that as long as that's still going on, I'm not interested in trading because that is an unidentified critical risk. So there we go. And I think that I will go for a stretch here. Let's take a quick lap around the roses here. This is these are the ES minis, NASDAQ mini, and the ES high, my high time frame micro composite chart. This is the RTH session only, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them, and that gives me a volume profile, micro composite VPOC, and red and green volume nodes, which push automatically to bookmap. Market profile. As I was talking about earlier, typically, starting out with market profile back in the around 2014, 15. This is considered or referred to as a string of singles, which means single prints, single TPOs, never revisited. Pretty well understood that once we got back into a string of singles, we would pretty much repair them or eat them up, they would call it. But look at what we're doing. Yesterday, we did this. So we basically repaired this group. Today, we're doing something similar. We're down to this group. I don't think that's interesting. I have no idea what it means, but interesting. We opened, about 3 ticks gap, and obviously that didn't matter much. And now here we are, quite well balanced rotational profile, and we are pushing up to the top of it a little bit. We did finally achieve the IB statistic with the IB high. This is NASDAQ. Pretty flat on the top. Look at this NASDAQ profile. Is this correct? Yes, it is. Look how flat that is on the top. There's no excess up there. Typically, that doesn't last long. Typically, that would build for excess. However, look at what happened yesterday. Similar situation. That's interesting. We are, see what the volume is. Well, relative volume is still on its ass, 65% of normal for this time of day. And the ATR continues to collapse. So at one point was up as high as 6. Now it's down around 2.5 to 275. Let's see average or ATR average rotations. We are green now by 0.1%. Net change of about 7 points. The way that works, first of all, you notice the color's all green, right? That's because it's a positive change. And that's got a real psychological impact on every trading platform out there, especially the retail, the Robin Hoods, all of that stuff. Boy, when it flashes green, everybody starts buying. When it flashes red, everybody starts selling. And how that works is real and easy. What the last price is as it compares to settlement. Period. The minute the last price is below settlement, this all goes red. This goes red per line. And the same way it was green. So there you go. And if you want to confirm that, here's settlement. We were below settlement, or right on settlement most of the day. And here we are up above it at the RTH high. I don't have the stat for that. Let's look. 32.2%. So when we open lower out of range, that's pretty crazy, huh? Pretty crazy. And I realize I'm putting all of these stats, if you tune in frequently or whatever, please do. I start at 8 o'clock every morning with description, upcoming numbers and reports and earnings for the day, and then the pre-market, and put all of these statistics in at that time based on the in the presumed open type. Now, I hadn't done the ETHI here because this morning I only put in a few of the statistics as we were just fluffing right around down here, and I wasn't sure if we were going to actually go above the previous RTH low or stay below it. If we got above it, we would have been lower in range. We opened right here, 64.5, and there's the previous low, 53. So I had put in, the mid and the VPOC and some of those. And I try to do as many as I can, but I'm not going to do it when I'm in a situation where we're just fluffing back and forth across, flopping around on it like a fish out of water, then have to go back after the fact and enter them again. You can go back to the beginning of the stream, and if you don't think I'm being truthful, go back to the beginning of the stream and watch. And there you go. There you go. Nothing about this stream or the channel or me is not completely transparent and accountable. That's the whole point of the thing. I want to, to refresh the point. This is my virtual journal. See what I'm looking at on my screens? And that's recorded. And my voiceover here gives insight as to what I was thinking. Why in the world would I want to bullshit myself? I'm not an influencer or a pimp for a prop firm. This is my journal, and this is me trading just as I've outlined in detail in the pre-market. So I have nothing to gain by not being completely honest and transparent. I'm not monetized for the stream in any way. I'm only in it, I appreciate your subs and your likes, and I really appreciate comment in the chat. Yeah, and that's the benefit of this stream is I like you am seeing what I'm seeing and listening to how I'm thinking about it. And I review the streams. They go from 8 o'clock in the morning until 1500 every day, 5 days a week. These session prices I push these from 1700 on Sunday evening until 1600 on market close on Friday, and I'm happy to share them free to whoever needs them. A lot of people use them. Just drop, subscribe, like, and drop something in the chat, and I'll hook you up with a link. You can use them in Bookmap or in your Excel or whatever. They're pushed out in the form of a CSV file, so it can be quite configurable and usable. And they're live in real time, pushed directly from my IRT. So there's that. That's about it from my side. I'm gonna take my midday shower break and things and be back after a while. That hootenanny in the cabinet room is going to be there. They're going to be lying to each other for quite a while, I suppose. So I'm not going to, and I would not be interested to trade in any respect for that. Even though it looks like we're setting up for the IB failure. Dicey, and with all of these levels here, my range requirement is as follows. Even though I have all of the criteria for the setup and the parameter and the trigger, the final cut needs to be the range requirement in a day like this. It used to be a hard-coded in my trade plan, but I've sort of made it more discretionary because I was trading even less because of it, if you can imagine that, than I am now. But for example, I would not be able to take a trade here because the range requirement says I must have at least 3 points, which is to my first risk neutral scale from entry, without any obstacle. And these lines, these price levels, are all obstacles. Any place where price can react and go the other way is an obstacle, and as far as I'm concerned. You can think about them any way you want, but that's where that goes, how that goes. So I'll leave this to you. I got the music's going here. Looks like I just switched playlists, and we've got got the right window. I am assuming Bookmap is the window preferred. One note about my new idea here is that this blue vertical line I put in at the session start each session, and that's just a visual reference for me. I can glance left or even my peripheral vision and see if I notice this blue line, and that allows me to understand that the entire session so far is in view on this chart, and that's the way I want it, because I want to be very, very aware of the context, because I believe that's a huge component in what we do. So there you go.
Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Pra fazer o frio evaporar. Pra fazer o frio evaporar.
Well, what happened? Exactly nothing, eh? I think this is probably going to be one of those nothing kind of days. Or once the risk is over and, the dust dies down, they'll get going. You never know. Right now we're kind of in that gray period where I'm always kind of even further confused. Are we gonna actually go directional now and trade towards these higher targets? Remember that this was a naked volume point of control, which from yesterday at the close, here was our IB high from yesterday. We did take out this naked volume or this micro composite volume point of control yesterday. Just I didn't want to do that. Barely. Here was the previous RTH high. I didn't put it in there pre-market, but this is pretty funny. The statistics, the probabilities for taking out the previous high when we've opened lower out of range. Out of 2,000 days, we opened lower out of range 292 days. Of those 292 days, we took out the previous high 34 times for 11.6%. Wow. That's pretty amazing, isn't it? I guess you could say that's not a very high probability. I just entered that in there because I think it's funny, and I hadn't even thought about it this morning early as being an applicable level that we might be interested in. So here we are at 1 point high, 1 point wide, if you want to call it that. And the full session in view, 1 point high, and here we come back through the IB towards the mean again. Definitely a low probability, high risk environment, in my view. So good luck if you're gonna trade in that. I think you need to review your risk management.
Hoy pienso en qué pasó y cómo me afectó las horas que pasé en aquel bus. No entiendo bien por qué mi abuelo distraído se bajó sin mí. Yo seguí. Acapulco no era un lugar para una niña de mi edad. Con solo 4 años enfrenté la soledad. Del bus te vi pasar y la calle caminar, y a pesar del miedo que me dio, no pude ni llorar. Eres la niña perdida, el chico me preguntó. No había entendido que esa niña era yo. Después de 6 horas encontré donde bajar, crucé la calle, di con el lugar, se abrió la puerta y todo mi mundo me abrazó, me abrazó, me abrazó. Estaba sola frente al mar. Nunca me voy a olvidar. Estaba sola frente al mar. Acapulco era el lugar.
Estava a viver, caminhando na vida, sempre chorando por uma nova ferida. Mas como até que de um mato nasce uma flor, muitas vezes é da dor que vem o amor. Eu que pensava que era um engano, olho seus olhos de luz e vejo um anjo. Esqueci dos tropeços, esqueci das caídas em noites perdidas.
noches llenas de amor. Corazón, hablarle en poesía, cantarle a tu alma y llenarla de ilusión. Amor, quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. amor. Corazón, todo lo que viví fue para prepararme y reconocer tu amor. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. Salga el sol, besar todas tus lágrimas y darte todo mi amor.
flor querida, la noche ha llegado acá y en tu vida puedes dejar la soledad, siempre contigo ella está. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Llegó la estrella, llegó para ayudarte a dormir y sabes que con ella nunca tiene que sufrir y con amor puedes vivir. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Contigo
Well, what happened here? I'll bet you a whole lot of people lost money. Yeah, it's not funny, but these kind of days are really, if you're not thoroughly comfortable with I don't know how to say it exactly. If you're not thoroughly comfortable with in knowing that you're going to spend a lot of your day not doing any trading, and you're going to wait for specific A+ setups, and days like this are a good day to go out and mow the lawn, leave, whatever, because a lot of people will not, they'll succumb to making up an idea for why they need to trade, and then getting hammered. If you traded, mean reversion, that's 56, 64, that's nearly 10 points. So that's pretty good right there. That would have been a reasonable mean reversion trade. It wouldn't have my range requirement, but it's a reasonable mean reversion trade. Otherwise, you're just peeing in the wind, Oh, there's a V reversal. Is the great and powerful
chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão. Pois é, as coisas chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Ay, amiga, cómo te extraño.
Do this, fix that, wake me up now.
Ay, amiga, te extraño. En nuestro universo todo era posible.
Terrible, I think, the way they treat me.
Cantamos, reímos.
Okay, we're fast approaching the world famous power hour. They may get it up out of the range here. We are just at the weekly or the daily expected move, which is interesting. Now these were put in here last night on the ETH. This was put in here last night on the ETH Open. And the weekly expected moves were on the Sunday night. The problem is, this was supposed to be the low side expected move, and this was the high side. That doesn't make any sense. Something I was doing here. I'm not gonna mess with that. That's something, this expected move thing is something I've been trying lately, and this for some reason looks pretty out of whack here. I'm not sure why. It's based on implied volatility in the options market. So never mind. Never mind. So I picked it up from some Anne-Marie, I think. And here we go at the top. Now, this could be interpreted as an IB continuation trade. This is a good example. If this were closer to 9:30 in the morning, we take the statistic, trade back down, don't get anywhere, trade up through, come down and test, and then take off on the IB continuation. It doesn't meet the range requirements because we're only 2 points to the first obstacle and another 2 to the next obstacle, and then points north. But it's going to work out in the rearview mirror. It'd be a real great idea. And the day is starting to become a little directional. So we trade up through it, test, and up. That would be a pretty classic IB continuation setup in a normal morning environment for me. Assuming this is the IB, we take now the statistic would be broken or satisfied. Don't go anywhere, don't get any place, come up, test again, come up, test, back down to here, and then can't get through it, and away you go. And of course, that's 100% rearview mirror trading. The stock and trade of most internet gurus. Well, it's 32C here. They were talking about light rain. That'd be kind of snazzy for you. Uh-oh. Okay, so here we go. I don't know where, but we're going somewhere. Well, we're fast approaching the world famous power hour here. Pretty crazy stuff. Pretty crazy stuff. Well, now what are we going to do here? We're in the world famous Don't Blink or You'll Miss It Power Hour. We have, pushed our range out a bit. We're at just a little over 20 handles. And that's great. a something of interest if you're. These are the. This is these are the basic steps of the IB failure trade, which we have been vetting together on Static. This is at Rod's, basically Rod's setups and parameters. If you're interested, Richard, do a screen snap or whatever there. And this thing is basically it's been pretty good to him. What I'm going to do starting tonight now is try to code this into my IB continuation and IB failure. Backtesting stuff in IRT. And then I'll be able to There you go, Richard. This is the equity curve for it. About a 30% win rate, if you want to put it that. But again, it's the importance of the risk to reward ratio. And that's over 8 months. So, yeah, it's pretty amazing. Pretty amazing. I'll be real excited to key that code that in tonight. I have an IB failure trade already. I just need to adjust the parameters. I've already got the entire. See, that's the idea about the backtesting that I was showing earlier today with the once you have this part configured, then the only changes need to be in the entries, right? So this is the trade management piece, and these are the entry pieces, which can change for this is IBC or IBF, or this could easily be applicable to mean reversion. Any environment or setup where you will use 2 lots and yeah, that's it. Any or you can do any combination of lots, but 2. Let me put it this way: 2 scales. I could always add a 3rd scale, like I have in my 4 lot, which is the next piece, and then also a break even or trail up idea. But for the time being, for generally, vetting these trades, as long as it's a 2, or as long as you're working with 2 profit targets, one is which is a risk neutral, and then you can change this. You can change your parameters any way you want to in the entries. If I want to change this to I can change the stop sizes and the target sizes and then I can also change the number of contracts up here. I can make it 4. And this would suddenly trade a 4 lot exactly the same way. So that's the advantage of it. Once you get it past that initial, or once I believe once I get it past that initial place and where I have confidence in the backtest, then I'm going to be real excited too. It's going to be a real exciting to me and very insightful to code up the parameters that were used in Rod's trading, because we have an Excel or a Google Sheets breakdown of every one of those trades. And I mean in detail. Let me just show you what I mean. If I can do that somewhere here. That's a little too much. Oh, wait. I thought I had a screen snap of that somewhere, but I guess I don't. It's none of my business to show Rod's content, you know. Other than I think it's fantastic, and I'm sure that, and I feel really fortunate. But anyway, there's a line by line. Oh, wait a minute. I can do this maybe. There's a line by line spreadsheet of all of the trades with ID, date, time, entry time, direction, entry price, exit reason, scale hit, target hit, targets, triggers, and then MFE, you know, all the data, pretty much all the data and more that you might want to capture. So that's, then I can compare all of that with my stuff, with what my backtest does with that same code, and that could be pretty cool. Now, somebody said something here. You can bet on that. Look at this. That's got nothing to do with the market trading. Somebody said something right there. Let's see if we see what. I don't know. Trump said there's a possibility of rebate checks for tariffs. I am assuming I assume this was the news right here. I assume this was what popped that. And also that Trump says he would abide by the courts. My assumption is that he figures he's got the courts in his pocket, so he didn't have to worry about it. Maybe not. Look at us go here. We're going to take that IB high we just did, and where are we going now? Who knows? I don't know what that is, but something is going on. Ooh, a V shape. Go short, go short. Yeah, I'm guessing that's. Let's see, what could that be? Let's check. Well, we're getting up now to where we've crossed over the Great Divide. That doesn't make any sense here. Had a problem here with my. This is where I show my previous micro composite VPOC, right? And it was tagged out by yesterday, and then here we go today. And according to this, our high here is 64.76.75. You see that over there in the info box? Same thing, 64.74.75. Not even the high. 64.76.75 is a high up here. Same story here. But this was the micro composite VPOC from the 22nd, which was taken out yesterday. So I'm a little puzzled. I'm a little puzzled about that. Oh, I didn't know that. Oh. That's pretty interesting. I didn't realize it would shift the whole box like that. I'm going to have to rethink this entire micro composite because this has gotten all screwed up. Typically, I go with price overlaps. That's the volume profile. That is the profile, like right here. These overlap, right? And that's the inset one. Then we have this one. Then there's this craziness. And then this craziness. And trying to keep aligned with what someone else, Tom, was doing actually. I pulled this main one all the way over, but I'm going to have to rethink this whole shooting match tonight. And that still doesn't explain to me why I have a discrepancy here at 64.80. Well, that's not good, is it, boys and girls? Drawing these different volume profiles around is what makes the difference here. And this one should be like that. In reality, oh, don't want to do that. It still isn't coming out right. All this was non-farm payroll, and we're going to fire everybody, and then we're going to put the tariffs on. We're going to fire Powell. No, we're not. So there you go. But that doesn't explain why this is up here in this high volume node. So I'm going to have to look into this just to make sure I've got my little boxes all, my micro composite volume profiles organized properly here. Well, there we go. Some more up. He must be saying some more good stuff. He's going to roll back tariffs, and we're going to give away free money or something. Something's going on. So he's just now ended his cabinet meeting. Wow. Wow, that was one hell of a 3 hour, almost 3.5 hour meeting. And I suppose the majority of it was just an endless stream of sound bites. Yeah, I don't know. I know that we've crossed the Great Divide, rounded the corner, and we're heading for the home stretch at the top of the hour when we will close the cash close. And look at us go up here. What is buoying them up? I guess it's the story that tariff rebate check is a possibility. I guess. Beats me. The thing about these kinds of that might be what was said in today's press thingy. And there could be something completely different said tomorrow. There's a part of the random critical risk danger that I think we're in and that I speak about frequently is the inconsistency of everything around it. We really don't know who's on first and who's on second, I don't know who's on second and who's on first. Abbott and Costello, I think was it. That's who that was. Well, we got it directional, didn't we? Yep, we sure did. So, if I'd have been a big brave boy and taken this IB continuation trade right here, I'd be pretty proud of myself. But how in the world, right here, would you know that this was going to start happening at the end of the speech? You wouldn't. That's what you always have to ask yourself about rearview mirror traders, or yourself when you're looking back into charts. Okay, what are you going to do now? Well, let's see. We rotated back here, 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 and here, and here. Would you have any valid reason to suspect this. Looking at the day's rotation, the levels, probabilities, the statistics, I don't think, I didn't. And I don't think anybody being honest would say that. I think a rearview mirror guy would, be all over it like stink on shit, but I don't think, look at this at the hard right edge. This is what you saw on the hard right edge at whatever the hell time that is, at 13:22, right? An hour and change ago. Still in the cabinet meeting. Still a potential for who knows what to be said. No, I wouldn't take that because I wouldn't know what to do with it right here. As it turns out, yeah, it got great, and then it got real great. But I'd love to know the secret there, but I don't. And in the spirit of honesty, transparency, and accountability on this stream, say it like it is, When I looked at this at the time, not going to do that. Certainly not in an IB continuation idea. What did we just have? We just had an IB failure, basically, here. In this test, reversion, we've had 1, 2, 3, 4 mean reversion trades, right? Outside in, outside in, outside in, outside in. That's the mean reversion trade. And now we're having a spike up here to the value area high. We've taken out a whole bunch of stuff now. We got yesterday's MCVPOC. Again, my workflow is when a level's been no longer an active level, I change the text to black. I'm still real puzzled about this story right here. So the 22nd of August, excuse me, was this thing here. And what this is saying is that the micro composite VPOC was up here and just taken out by this one, which is, as I remember it yesterday. And now we have this one. So incorporating yesterday into this brought our MCVPOC down, and it's been taken out again. So, okay. I think that's valid. Oh, 1440. So we've got the something. We've got the market on close orders in 10 minutes. Let's do a recap here, shall we? Teensy weensy gap open, lower, closed within, basically opening swing. It was only like 1 point. Pretty much flat until this press conference and a little bit of news started coming out about perhaps rebate checks and things like that for the tariffs. And we got up here and the fact that they're, well, anyway. So we did extend to the upside. pretty much just overlapping and still working our way down these singles. I think I've worked out what the story was with the micro composite VPOC here. And this is the NQ. About this. Well, we've picked up 4 handles. We were 65% of average volume a few minutes ago. Excuse me. And here we are. Not much of a range today. 20 handles or 20 and a half, I guess. 25. What do we got? 44. 78. 30. Wait. Oh. 25, 26 handles. And we're pulling back. Now tomorrow, let's take a look at something real important. Not that crap. Tomorrow, baby cakes. Wait a minute. We don't have anything in the way of reports really. Crude inventory, that's pretty, if you're trading CL, well then look out. But this does have some impact on where we are economic wise. But here's the real biggie. Earnings report. Guess who's coming out tomorrow? NVIDIA. And it's after the close. So there's going to be speculation and trepidation all day long about it. These half moons or quarter moon means after the close, and the little star or sun guy means before the open. So all eyes are going to be on that. It's the largest company in the world, $4.45 trillion market cap. And then Thursday and nothing on Friday or Monday. Let's see if that's even over here. Oh yeah, there we go. NVIDIA. Like I said before, this is Financial Juice. This is investing.com. Both are free. You can set up your filtering for the reports you want. With the investing.com, you can set your time zone. Financial Juice uses your computer to work it out. And here are the biggies for tomorrow. We got the AA crude, who not so much anybody cares. Got a 5-year note auction, which is bid to cover in a 5-year note high yield. I'm not sure what's exactly the difference in those auctions, but right now the bond markets and the auctions and the notes are real important to the general economy. Look at this crap. Exxon held secret talks with Rosneft about going back to Russia. What a crock of shit. Wow. That's disgusting. But it's the world, I guess. It's all 100% mercenary, all about money. That's all anybody cares about, I think. This jerk, especially. Bassett, whatever it is. Yeah, I saw a record large tariff collection. No kidding. We haven't had big tariffs until now, and these are taxes paid by the American people, not by anybody else. And he's bragging about it. I wish people would realize that. I'm pretty amazed, actually. So there we are. And now we're going to 3 minutes or so until 4 minutes until the market on close orders. And we are going to now zoom over to here. And we popped up here, and now we're just pulling back to our, basically our support level. Certainly not anything I'm going to get involved with. Be interesting to see if we notice the market on close orders. Lately, we have not even, they haven't even been a bump in the road. Market on close order imbalance is what it actually is. And we'll monitor it over here. It'll pop up over here after the release. All right, 50 minutes. 50 seconds. I don't think we're going to play 50 minutes here for the market on close orders. This has been pretty uneventful trading days here. It's disappointing for the stream, but it is reality. This is the magic of trading. You know, if you want to not have that a lot of flashing lights and horns going off and people blowing up and scalping trades going on, that's a different world than I am in. And that's not the point of this exercise, so I apologize up front if that's what you're looking for. And I think it's weeded out to pretty much me here today now anyway. Okay, there's our market on close imbalance. 92 million sell side, NASDAQ, S&P 500. 721 million buy side NASDAQ. 148 million buy side Dow 30. And 284 million buy side on the Mag 7. Right here, see that? Everybody's figuring NVIDIA is going to be a beat, I guess. Here are those. Now that's a more reasonable reaction to market on close orders. That's much more normal than what we used to see. That's 10 handles right there. It's a 10 handle move. That's much more normal. I like that. That's, last week I'd be standing here talking and realize that it had already come and gone, and exactly it'd be like this, nothing, absolutely nothing would happen. This is much more normal. So there you go. I think I said this earlier in the stream someplace, but I will repeat myself. This is these bubbles here, which I don't have 3D. They can be. It's just kind of pretty, but I figure that processing time could be spent, or processing power could be spent somewhere else. But they're colored by delta. Obviously, there's buying and selling going on at these levels, but this is, the aggressor was, net delta, the delta net, so the net sellers in this case, and somewhere else around here, net buyers and net buyers. And I have no idea why it's acting as it is right now, other than the stuff that Now let's see what we get with the closing swing trade. We've got 6 or 5.5 minutes left. If something materializes here. As you see, the liquidity starting to jam in around either side of the current price. I see oh yes, I do see something. I hushed my mouth. Look up here at 98.75. We got 380 contracts laying up here. And that's approaching the previous all-time highs. Now, let me point something out here. This is the all-time high, which was put in the 13th of August on the 25th during the RTH session. Not to be outdone, a day or two later, these boys jumped over the top of them and put in an all-time high in the ETH. And funny enough, oddly enough, they haven't been able to get up there and take that out yet. But I can tell you, it's my experience that is burning a hole in these RTH traders. They seemingly hate to have any records or major levels held by the ETH sessions. We've had a couple of leapfrogs in July. I've taken them off the chart here, but we have. Looks like they're going to get up to the previous RTH high, which is 11% probability. And then right above it is the MVPOC from yesterday at the close. There we are. Okay. Disappointingly, I'm going to the balance of this week, I am going to more or less have a provision in my trade plan. As I've said, umpteen zillion times lately, I'm vetting the IB trades. So when you're doing that, you can't change any of the parameters. Otherwise, that data is not part of the data set. It can't be used in the subset that you're using for, your calculations of probabilities. So I use my 2-lot risk neutral package, and that's what I've used up till now. Oh, we got that. There we got it. Now we're getting a little higher now. Okay, aren't they happy? Aren't they proud of themselves? Look at here. Oh, yeah, we got that one out. They're really happy now. However, because I want to get these 5 contracts or these 5 accounts over the profit target and into the XFA, my plan will be the following. Obviously, I'll use the 2-lot risk neutral bracket. And as I have done for the rest of this session, portion of the process, I will certainly not change the stops or any of that kind of thing away from entry, but I will, depending on price action, and once I get risk neutral scaled, and assuming that I get more profit underway, I will scale to protect. I will not scale. I will trail up my stop to protect earned profits, so that I, especially if I get up to where I'm over the profit target, I'm not going to let it go, back in my face at that point. So that'll be, I'm saying that now ahead of tomorrow and the balance of the week. And of course, if it just marches straight on to my targets, then yay, no problem. And it could be included in the, look at here, 700 contracts at 85. Wow. Just bouncing around 1,000 of them up there. That's a lot. The closing swing trade, selling the hell out of them. I guess that's that. Whatever it was in the 100 and I forgot what now. Jesus. 92 million sell side on the S&P. I guess. They're selling something right here, huh? Building some liquidity, building a little distribution up here, and still holding 600 contracts. Was up to 700. Now they've traded it out, or they've come down with them. They're chasing the market down a bit. And there we go. There's the cash close, ladies and gentlemen. I'm not sure which of those buttons are which, to be honest with you. What have I got going on here? Air horn. Oh, I didn't want to do that. Where's the clapping thing? Oh, there we go. So the buzzer's on this one, and the applause and laughter is this one. And the Mackie After Dark music is the other one, and the air horn is somewhere else, and scream is something else. And I'm not going to do them, but I completely forget they're here. They're built into my mixer. All right, so there you go. There's another 7 hours in the can. 7 hours and 1 minute and 39 seconds. Be sure you drop into the stream 8 o'clock in the morning for the analysis of the upcoming reports, the pre-market setup, all that stuff. Also, have yourself a great evening. Get away from the screens, rest your eyes, do something for your health, push-ups, pull-ups, take a nap, whatever it is. And I look forward to seeing you tomorrow. I've already gone on the record as to my plan for stop management, because typically I don't touch the stop at all in that bracket. I put the bracket on when I'm betting a trade. I put the bracket on and just push the mouse aside, put my helmet on, and step back, you know. But in this case, I don't want these to come back, because I don't want any more of this drama about we need to reassociate your this and that and do something else. I don't want to go down that route with these guys, so I want to make it real painless. And there we have it. Have yourself a great